Boom. We are live. What is up, everyone? Happy Friday. Welcome back to another episode of Benzinga Live. Today's episode is sponsored by Gatorade, specifically orange Gatorade. As you can see, it goes well with that little box down there that is also orange. But all right, guys, giving you guys a quick rundown of the day. We've got a packed show. As always, David Green will be joining us in a couple minutes. We'll be doing some live trading with David Green. And then at 12:15 p.m. Eastern, we'll have Brian Goodman, the CEO of Golden Matrix, ticker GMGI. Then an interesting interview at 12:30, Ken Honda, the Zen Millionaire. So he'll be talking kind of about the psychology of money and how to be Zen while still being an investor, which I have yet to find out how to do. And then Dave Mazza from Direction will be coming on at 1 p.m. Mark Moran from Litquidity at 1:45. And then we'll get a surprise appearance from Sharon. Sharon from Benzinga. All right, guys, let's go ahead and get the show started and bring on David Green.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. So before I bring David on, I saw someone in the chat saying there might be some news overseas, some poor negotiation news. So we will look into that. I guess oil is spiking as a result. You've got the oil stocks, obviously Chevron, XOM, and I almost said Enron, not Enron. What's it called? Exxon up 2% as well. But Born to Be Free is asking good night last night. I don't really know exactly what's in reference. I assume you're talking about the basketball games and sports gambling. I had I think the parlay I gave out on the show yesterday, I was 3 out of 4. I missed the Michigan game. I took Michigan +5. Villanova covered that easily. Villanova looked great, but I did also make some money. I had a Duke money line, Houston money line parlay. So yeah, excited for the games tonight. I'm gonna once Spencer joins me, I think we'll touch on the games tonight because I know we spent a lot of time talking about college basketball yesterday. But all right. Enough of sports. Let's get to stocks. Let me bring on my man, David Green. David, how you doing today?
Good morning, everybody. How's everybody doing this morning?
Good, sir. And you?
Very well. Good morning to my Benzinga family. What's going on? Yeah, so we just saw a nice spike in oil. Something that wasn't good news in negotiation. Then there was a fire that broke out in one of the plants somewhere over there. And I'm worried about Iran now. But we can see if we look at the Gush, which is an ETF for oil. It's been a nice, beautiful uptrend all day, but now we're making our highs again in oil. So that is probably why we're seeing a big pullback in the spiders, which we have seen, right? Oh, guys, if you like volatility and you like trading volatility, this is the place to be, right? The market's been pretty good as far as that concerned. Got $1.50 in NVIDIA. Very nice, Davey. Very nice. So opinions change as far as trading is concerned these days, Aaron, every about 30 seconds. It's insane. It's crazy, right?
I know. I think you said not too long ago on the show, David, that in your, 10, 15 years of trading, or however long it's been.
35.
Okay. I didn't want to say a number too big. You don't look old. You don't look old enough to be trading that long. Okay. But I think you said in your time that this has been the craziest market. It's not one of the craziest, but the craziest time these past couple months.
No question about it. Volatility has been insane. And look, you got to be Jack be nimble, Jack be quick. Use your technical analysis and get in and out of trades. Long term, I said when we hit the crapper and the lows, we're going to be fine long term. My guess is we make new highs again at some point this year. I think we will. We're always going to be okay long term. But, this is great for trading. It's been good for trading. If you use your rules and follow your rules. We just had a nice trade in NVIDIA down here. We were watching NVIDIA. Now, NVIDIA, we go to the daily chart. NVIDIA, AMD, all the chip stocks have had, just a tremendous run from their lows. NVIDIA recent was 214. We went to 285. So we would do for a little pullback day today. That's what we're getting. AMD was the exact same thing. We had 6-7 days up in a row. getting a little pullback now. These are always the stocks, especially NVIDIA, guys. Whenever NVIDIA gets a big smackdown, it's always worth buying a little bit because it's just a great stock. It's a great company. It's always going to go higher over the long run. We just had a beautiful trade set up down here on our pivot point in NVIDIA. And I think we made 50 cents a dollar and $1.50 over the course of the next 10 minutes. But you can see NVIDIA went from 280, hit our pivot point at 273.70, and it went up from there to 275.25. So a nice between 50 cents and $1.50 trade we just got in NVIDIA based on some technical analysis. Boeing tanked. Any thoughts on Mullen? Let's take a look, guys.
Mullen's one of those cheap stock that's been running recently. I think it's in the EV space and had some positive news. I don't know. I'm not in this stock.
Yeah, again. Yeah, this rallied up when NEO rallied up a little bit. XPEV, they had a couple of days where all these things rallied up a little bit. But you guys know how I feel about these $2 stocks. If you're ever in them and you get days like that, certainly take all your profits, please. We were talking about Tilray this morning, right? Because the pot stocks have been in play, as we can see,
past couple days there is positive news about
they're voting. Supposedly they're voting next week in the House, and then it's got to go through the Senate and all stuff like that, right? But we talked about Tilray this morning and that it was a screaming short, when it opened up above 850. I don't like any of these stocks. Stock went down $1 from there. This is always buy the rumor, sell the news. You know how much competition there is. And first of all, who knows if they're really going to pass it? There's a long.
Well, yeah, Spencer and I were talking about that too off the air, David. Just that like every time these pot stocks go up, they come right back down. They can't hang on to any of these gains seemingly ever.
We've seen that. I mean, here, look at your weekly chart in Tilray, right? For those of everybody who was holding up hope, right? I mean, from 60, first of all, the stock was much higher than this. If we go back weekly, we were in the 40s. But look at this, what this horrible trend has been on a daily chart until, we broke out above here. But these things do this every once in a while. They never hold their gains. Here's the weekly chart, right? Last time this happened, the stock spiked up to 13. Stock went back down to 5. So now we're doing the same kind of thing again. We got resistance at 850, which we kind of touched this morning. So that was telling us to short the stock. It's just not something I believe in. Again, you want to trade them, it's a beautiful thing. Now, GameStop is a different story now, right, guys? Look what GameStop's done in the past few days. The memification is on. I mean, look at GameStop, right? We were on 2 weeks ago, though. I think I was with you guys, right? Scalped ACB this morning. That's great. And Steve, to me, they're trading opportunities, but any big rallies in these things I think are short opportunities. And you can do it by buying puts in them. I want to show you guys, and I think it was 2 weeks ago we were on, Adam, and we were talking about, and I have never bought GameStop, but we were talking about this weekly level, right?
I do remember that. You pointed out that you said I
don't get involved in this stock, but look what happened when it hit our weekly level, about 80. We said if you start averaging in around $80, you'll probably be okay. It went down a little bit. I didn't expect this to happen from 80, but look, it held the weekly level coming down from $275 to 80. So, you had a technical reason to get in down there. All I can tell you about these things, if you're in them, enjoy the ride, take your profits and trade them. Could it go back to 300, 400? Go ahead, Aaron. I'm sorry.
So while we're talking about levels, and I don't want to sound like a broken record, but the last couple of times you were on, or at least a couple of times, we've talked about Netflix. And we went back on the weekly RSI, and we had to go back like 5 years to find a time that the RSI had been this low. I maybe I'm just not that patient, David, but I keep thinking this thing's gonna bounce and reverse, and it's just kind of hanging out down here, doing much.
This is the weekly. We did have a bounce on the daily chart, and
that was a nice move. That was a nice move.
Exactly. And when I'm looking at a stock like Netflix, it's very rare you ever going to see a 20 RSI in this or an 80. If you do, you want to buy the stock. But here, even historically for Netflix, this was a low RSI. We got to 30. So, 30 historically is a low RSI for Netflix. We were down 14 out of 15 days, and you got your nice bounce. But look what happened when we got up and tested our first resistance around 384. So we got up to that 384 level, and we've rejected that. So again, above 384, and you can be bullish in this again. And if you get down to these levels again, you start buying and putting some away. Shopify we were talking about, I think, last time too, right?
Oh, yeah.
This thing has had a tremendous rally off the lows. We had, again, and look historically, right? Shopify got to about a 25 RSI here after being down like 8 days in a row. And we had this tremendous rally up. So when you see these really big oversold positions, when things are down 7, 8, 9 days in a row, it's usually a sign where you can start grabbing a little bit of stock, and you're gonna get a bounce from there. Look at Shopify just now, guys. We almost got to our pivot point at 665. Look at this stock, just went up $14. So if you're a Shopify trader, this is a spot where you might want to short a little. We're right around 680.
Yeah, I mean, this thing's
that's a monster. It moves like it's insane.
Speaking of monsters, insane. How about Apple's move yesterday?
Well, you know what I'm going to say about Apple, because I always say it about Apple, right? And you had a chance to grab a little of this in the 150s, I think, not too long ago, and we had this big dipsy doodle down. Let me see. Yeah, we got to like 151 in Apple. And again, Apple's my favorite stock of all time. It's another one. When you see stock down 7 out of 8 days, you just grab a little. Eventually, you're going to get a nice bounce in that. We had the weekly, which I was hoping and praying we got to around 146, but not quite. We got to 151. But Apple's another one. Anytime you see this stock down 4, 5, 6 days in a row, you just grab a little and hold on to it.
Yeah, I mean, any weakness in Apple stock is a buying opportunity. It's as simple as that. I actually, the other day, I'm looking at my order history right now. On March 8th, I bought one share of Apple at 159.90 something, just because I wanted to. I was like, this might be the last time I'll ever be able to buy Apple below $160.
Yeah, and you made $13 on it.
I know. Yeah.
That's okay. It's the thought. Sometimes it's not about the money. It's just being right.
Yeah, it's not being about right the money for me. It's exactly
right, man. And I think we were talking about Baba last time, right? That was just lucky what happened in that. But that thing got so oversold on a daily and a weekly chart. This was just insane, right? We were talking about the mid 70s, I think, whatever that was, a couple weeks ago when we were with you guys.
Yeah, and I mean,
go ahead.
Like you said, there's sometimes you nail a trade because you read the chart right, you did a good job, and sometimes you just get lucky. I got lucky. I was holding some Baba calls when the Chinese government decided to come out and say, "Oh, we're gonna play friendly," and then it was up 20% the next day. I had no clue that was gonna happen. Obviously, so
nobody did. I mean, we were long because it's set up for a reversal swing trade, right? We had 5 days in a row down, and we finally got a relative strength to 20 or lower, and that was this day. The same day I think it closed up $5, and the next day it opened up $30. But that's just pure luck when something like that happens. But again, the stock was just way, way, way overdone. So we got a tradable bounce in it.
Yeah, I mean, you still got to be kind of ballsy to go in there and buy something that everyone else is selling.
I remember we were on with Spencer, and he said, "Oh, how do you buy this stuff?" And it's, it could go to 50, it could go to 40. Well, our technical analysis told us that it was getting really stretched out on a daily basis, and it was time to grab a little. Look, everybody, any trade that you do can go against you. We know that. But, if you're using your technical analysis and you're waiting for some of these things to get really beat up, odds are that it's going to work for you. And that's all we can do. All we can do is put the odds in our favor when we make a trade. That is it. You guys get a little D-Dog far from moving average here, guys? A couple of my traders just pointed out D-Dog. I'll show you what we mean by far from moving average. I mean, the relative strength was close to 20. When we have a stock that's down 8, it's almost like the daily we were looking at in Baba. The stock's down 9 out of 10 red bars in a row. We've gone from 149 to basically 143. We start looking for a little reversal in this stock. And we do that by going to 1 minute chart. We wait for the first sign of a green bar. We buy a little, and you take profits on the way up. That's a far from moving average trade. I don't know. Anybody in the room get that one? Nice call out, whoever called it out. Moran is far from an early test. Yeah, again. All right, let's take some questions or some stocks, guys, if you guys want to look at anything. SMFL.
I was just going to say, drop some tickers in the chat. We'll check them out. Preferably if they're not, penny stocks or, they've got they're a legit company. But yeah, we'll take.
let's not, again, guys, I wish everybody the best if they're in these $1, $2, $3, $5 stocks. My only advice would be when you're in them, okay, is take profits when they go in your favor. But it's not
All right,
something that we look at normally.
Here's a good one. Marathon Oil, MRO.
Yep. Marathon, Chevron, Oxy. These stocks are all going to trade with oil, right? And there was a time where these things got really stretched out to the upside. Again, I mean, Marathon's a beautiful looking chart, right? And this is not going to be a gigantic mover. This is not something that's going to go up $5 or down $5 one day, but it's a beautiful looking chart. You know, a pullback to 24.50, 24 could be an area to get back in. It's not stretched out. So to me, that stock still looks positive. 100%. UPST, I've been getting a lot of questions on lately.
Oh my God, this thing's a mover.
It's a mover, and it's been absolutely horrendous lately, right? But here, let's look at UPST today. And I think what we do in this thing, I think we bought it once for a far from moving average trade down here and made a couple of bucks. But when we talk about a trend trade, this is what we look for, guys and girls, okay? This stock is in a horrible downtrend. I'm just talking about today. And it got up to our 15 EMA at 107.50. So when the stock is in a downtrend like this, we look to short it when it gets up to our trend lines. So you could have gotten this stock around 106 and then 107 and change, and the stock went down $6 from there. We want to look a little further out. But again, this is a trade that some of the people did in my room. It is a trend trade, and they're still in a trend, and the stock is down $6 from the first entry. We'll go daily. And again, you know, look, we're in nowhere's land. We got a lot of room to the double bottom at 85, and we just kind of broke, you know, all support on the way down here. So nothing I'm looking at to get long that. It's just a trade unless it gets really oversold again. Guys, nice job in D-Dog on the far from moving average. A couple of people took 50 cents and $1 on it. All right, what else we got? AMD. AMD is going to trade with NVIDIA, right? And again, they made this morning, NVIDIA, AMD. This stock was so strong all morning, right? Came down to our first trade down here was our 200 EMA around 119. Gave almost $1.40 from it. Tested it again. Not going to do anything there. And now it's kind of started a downtrend. But it's amazing to me that intraday, you know, this stock moves 4 or 5% intraday. And it looks so strong for the first hour and a half. And now it looks like crap. So again, we just look for spots to buy and sell the stock. You know, if we spike down to 115.80, that would be a beautiful spot for a trade. And again, NVIDIA is my favorite one in this space. You know, NVIDIA is another one. When you get big, gigantic moves down, you just buy a little and put it away. And
yep, that and Apple to me are ones that I just never feel bad about buying. I'll buy all the NVIDIA and Apple I can.
Yeah, me too. Me too. I mean, Apple I have for such a long time that I sell it from time to time when it goes up, and then I buy it back on the pullbacks. Facebook is another one, right? Facebook looked tremendous this morning. Right, look at this, right? First of all, the first move down to 219.13, it exactly hit our 200 EMA. Boom, chakalaka laka. But look how strong this looked in the morning, right? Well, the news came out, whatever it is, and this is what this market's susceptible to now in any stock that you're looking at. So if you're a trader, you can't have an opinion about anything. You can't, oh, I love Facebook because it's going up. Well, guess what? It's not going up anymore. Now it's going down. Overall, Facebook, let's take a look a little longer term. It's much better, right? Much better than it was. You almost have like a little cup and handle here. I would say we need to hold, let's see where we are. Yeah, I mean, as long as we stay above like 210, we'll call it, in Facebook, that means we'd stay above all these moving averages and the stock's okay. So above 210, I think we are right. And if we get really good, you know, you can see 247 in this stock, but definitely much, much better than it was. But if we look weekly, all right, look how weak it is still on a weekly. So, you know, 229 is your first real resistance on a weekly chart. And again, Facebook is not one that I love because it's too susceptible to everything that's going on with regulation and all that other kind of stuff that you have to worry about, right? What is your other stocks in that Apple NVIDIA class? AMD, Amazon? No, those are my two favorite go-to stocks when the market gets killed. I'm serious. That's what it is. I think Amazon is always going to be fine long-term, yes. But listen, everybody thought Netflix was always going to be fine long-term also, right?
Yep,
and,
it was in that FANG. And same with Facebook, for that matter.
Amazon's got earnings coming out when?
I agree that I think even there's probably some other stocks I would consider stocks that I'll always wouldn't mind buying on a pullback, or at least for now. You know, obviously things can change, whatever. But for all intents and purposes, Apple and Nvidia to me are on a tier of their own, even if there are some other ones. Like I would throw Google in that cat. Like if Google dropped 10% tomorrow, or not tomorrow because tomorrow's Saturday, but if Google dropped 10% next week, I'd buy some. I don't think Google's going anywhere. Google's still going to be here.
I would put Google in that category too. I mean, I like Google so much more than Amazon or Netflix or any of those other stocks. You know, if we look at weekly in Google, right? First of all, look how gorgeous this has been for a couple of years in Google, right? And when we had the big bop down not too long ago, we almost got to a nice support level. What is that? Let's just call it 2,500. And we rallied 400 points from there. So I agree with that. You know, Google's another one. And aren't we splitting soon? Is Google splitting? And
Google and Amazon.
Yeah, 20 for one, something like that.
Yep.
Each.
It's gonna be like 150. It's gonna be $150 stock.
There you go. When these both split, especially Google, usually you'll get a little pullback from wherever they split from, and then you can stop buying it and put it away long term. I know every time Apple has split, and it's probably split 20 times since I've owned it, it's gone back and made a new high every single time. Every time the stock has split over the last 20 years, whatever it is, it's gone back and made a new high. So I would put Google in that same category also. Absolutely. Oxy. I'm only been trading for 5 years or so. All right, that's all right, Clark. Oxy's pulling in a little bit here, guys. I do not like the trend. We're coming down from 60.50.
Holy cow. I missed this move on BTU, Peabody Energy.
Let's take a look. Oxy, guys, for the room, 59.20 and then 58.60. So 59.20, 59.10, we can grab a little to stay in the trade. BTU is energy, right? If I'm not mistaken.
Yeah, coal.
Energy. Oh, yeah, all these coal and steel have been going bananas too, right?
I know, but this is up 100. I've actually been watching this one since like for the past like year, but I didn't know in the past three months past 3 months it's up almost $17. It was a $10 stock.
Yep.
It was a $10 stock in December.
Yep. And it still looks okay on a daily chart. It looks fine. Am I going to run in and be a long-term investor in BTU at these levels? No, absolutely not. Yeah, Cliffs is another one that made a big move because of energy, right? The last couple of days.
Shannon from Scottsdale is asking if you've got a new favorite stock to hate. I love to hate stock.
To hate. I don't know. To me, everything out there is a trading vehicle, right? As far as I'm concerned. So as long as stocks act well at my technical analysis levels, there's nothing that I really hate. I've hated AMC for a long, long time. Okay, so there you go. I hate AMC. Let's put it that way. I am not a big AMC fan. I have never been, and I never will be. So, yeah, I hate AMC. I'll give you one. I don't like AMC. I hate it.
There you go. Clark's looking at you. That's the uranium fund, I believe. Or it's Energy Fuels. It is a uranium play. I know that.
All right. I mean, again, this is not something we're ever going to play as stock. Even at going from 7 to 10, it's nice. And as long as I would say we stay above 930, you're probably okay. I think stock looks all right. It's fine. Nothing special to me. It's had a nice run up, and it looks okay on the daily and weekly. It's still hanging up. I'm over 50% on UUU profits. Oh, that's great, Abel. And that's what you should be doing, right? When you're up 50% on any kind of trade, you take money out, keep raising your stop order so you lock in a profit. All right, great. So you're in at 660. That's spectacular, right? So I would still have a little left, and you just keep raising your stop up now, right?
Oh, David, let's look at LMT because it looks like we came down from the highs that we hit.
Remember we were talking about shorting it when we were on here, when we had that gigantic move up here?
I know, and now I think if we don't break those previous highs, it'll be setting up for a short again.
Good. It'll definitely be a double top if we get back up to 480.
Yeah.
Again, let's look at this one, right? This is the day we shorted it. I think it went down 30-something points the next day while we were talking about it. We shorted it this day, and the next day it went down like 30 points. But if we go down here to the 30 on the daily, we kind of held that, well, not really 419 level. It went $8 below it, but yeah, now we're rounding back up. This is all about Russia and what's going on over there. Limited, Raytheon. Right?
Yeah,
Raytheon.
so but unlimited. If it gets back up to 480, you're just gonna wait and see if it.
No, I'll be shorting it again if we get near 480. Absolutely.
Okay. I was looking for some levels to get into a short trade on that whenever the time's right.
Yeah, I mean the only thing this would be a double top, and I'll trade double tops all day long on an intraday basis, and certainly on a daily or weekly basis. And again, look, when we got the RSI over 80, this was the first time we got the RSI over 80, right? And this is a daily chart. The next day, the stock went down $22. We got the RSI over 80 again here. The next day, the stock went down $30. So if we're looking at the chart again, Aaron, let's get an 80 RSI again, wherever that is. Maybe it's higher than that next time. But when we get the RSI up to 80 on a daily chart again, that's when we jump in. Yeah, someone just said something about day trading as opposed to investing. And yes, what they said was this is day trading, so you need high volume and fast movers. Correct. That is exactly what we're looking for when we're doing day trading. We are not looking at anything long term. We need stocks that have a crap load of volume and that have volatility. That's what we're looking for when we're day trading. And it's a completely different animal, guys and girls. You know, it has nothing to do with investing. It's just a completely different animal. And if you get good at it, you know, I have people in my room that started trading 10 shares of stock, and now they trade 1,000 shares every time we do a trade. And we're just trying to capture these short-term moves all day. We take what the market gives us. A good day trader should be bored most of the time, because if you're flopping in and out of stuff all day long and it isn't setting up technically, chances are you're not doing well. So, yeah, it's a different animal. We love it. I love it. This is what I've done my entire life. We still do our swing trades. We still do our options trades. You know, every time we've done something, when we've been on Benzinga swing or option, I think we've been pretty good. SoFi, we posted that we got back in at 780, right? I think that was a couple of weeks ago, too. We got back in at $7.80 in SoFi, and I think we wrote it up like $1.20. We made like 15% on that trade also.
Yeah, and that's what's so great about this is you have like I have my strategies for like when I want to do a swing trade or when I want to do a longer term trade, but that's not necessarily what I'll do if I'm just trying to do a quick in and out trade. So it's not something you have to do. You don't have to do 100% either invest in your day trading. You can do like what David and I do. We trade a little. Well, David trades more than I do, but we trade. But we also have our separate investing accounts where I have a lot of just what I would consider pretty conservative holdings that I'm just like, you know, in my long-term investment account. You don't have to be trading all day, every day, like David said.
Yeah, and when you're 25 or 30 years old, that's what you should be doing and nothing else, you know? You pick the good companies that have solid fundamentals that you know are going to be around, and you buy them anytime they go down. And how old are you, Aaron? 20?
12, actually. 12.
That's what I'm saying.
Actually.
30?
25.
I mean,
25.
25. Yeah, so this is what you guys should be doing. You know, it's amazing when you look at an actuary table and they start talking about compounded interest and whatever it is, right? And you put $800 a month in whatever kind of fund it is that averages 7 or 8%. And in 30 years, you have like $2 million. And it's true.
Rule of 72. I was literally just before the show, David, showing some of my colleagues. So our producer comes up to me and says, "Oh, I put my money into this crypto thing where they give you 10% a month." And I'm like, hold up, 10% a month? That means if you put in $1,000 now, we were doing the math, and it's like if you really got 10% a month, you put $1,000 in now, 5 years later, you have $300,000.
That doesn't sound
I call bullshit.
Yeah,
on the platform.
I call bullshit.
That's what I'm saying. I'm saying it's unsustainable.
10% a month.
10% a month. I'll take that all day. I'll take that all the.
Sorry.
That's even better than Bernie Madoff.
Sorry.
Possible.
So, who is this friend? Who is this friend you speak of?
It was Rohan.
Oh, it was Rohan? Oh.
Yeah.
Rohan, man.
Let's see. Tell him to show me the stats.
No, we're gonna try it. We're gonna try it out.
Okay,
We'll see if it works.
I will say this.
$1 million tomorrow. How about that?
Hold on.
I will say this. It's an experiment.
Wait.
So it's an experiment, right? Like I'm not putting a bunch of money in there, but I will say this. I don't think the project's going to last that long. I think it's going to last like maybe a year.
You think?
Yeah.
Like I understand that. I'm just experimenting with
All right, good.
That's
I hope it
fine.
works out for you.
Yeah,
I hope
do
it works
too.
out for you.
And if it works out for you, please let us know.
Yes,
We-
let us
Yeah,
know.
because I have a lot. I have money. I'll be happily willing to give. I'll sell
Yeah, me too.
everything and give it to you for 10% a month.
Yeah, I'll
Oh,
do.
man.
I'll slap you $1 million right now. Give me 10% a month. That's 120% a year. That's a double.
Yeah, every
So-
year you do that. The rule of 72 says you do that. You double your money, and well, you would double your money in that case in a year, but that means in
10 years, it would be like $50 trillion.
Yeah.
compounding. What was it? Mark Twain said the compounding interest is the or Albert Einstein.
Mark Twain said that. Did not say
I don't
that.
think it was
Einstein,
Mark Twain.
someone said that compounding interest was like
The eighth wonder of the
it was
world.
Einstein.
Yeah, it may have been Einstein.
I get Einstein and Mark Twain mixed up from time to
Listen,
time.
my whole point was when you're young, you put money into the stock market and you forget it's there.
Yep.
That's my point. That's it.
because the one thing you can't get back is time, and you can go further out on the risk curve if you want, take more risk, get more potential reward, but you're not going to get the time back. And time is your most valuable asset when it comes to compounding. So
That's right. And especially, guys, when markets are going down. That's not a time to be scared. I remember when we had COVID first hit, I had plenty of people saying to me, Dave, my 401k just went down 30%. What do I do? Do I panic? Do I get out? No, you never panic and get out, guys, especially when you're younger. Ever, you buy more. End of story. There's no such thing as a crash. It's just a buying opportunity, period. It's worth,
although
150 years over time.
that's where I agree with you, but it is easy to say that when you're not in the crisis. Because I mean, gosh, not that I've been in the markets that long. I haven't. I'm 30 years old, right? But like that was the first crash that I guess that's not true, but that was the first that was the scariest thing I've ever been through as an investor, right? And it was terrifying.
It is.
And I can't imagine what it would have been magnified times 30 if I was at a point in my life where I was like nearing retirement age.
Right.
And I need this money like in a couple of years. Like I can't. It's hard. It's so hard. So it's easy to talk about it now, but when you're in the crisis, man, it's a whole different beast.
Well, but here's the gig with that. Okay, both of you got Aaron and Spencer.
Yeah,
I'm 62 years old. Okay,
yeah,
I have been mostly out of the market for the last, I'm going to say 5 years. Right.
okay.
When I got close to 401k time and all that other stuff, I'm not putting that much money at risk anymore. I'm old.
Right.
I need the money. So when you get, up there to be a little bit older, you cut your exposure significantly. That's what you do. But when you're your guys' age, no. You got to look at those as buying opportunities, and that's the end of the story. That's it.
I agree. I've said this a few times now, but like the very last day that we were in the office before we all went remote in March of 2020, I looked around to nobody in particular, I think, and I said, this is going to be an amazing buying opportunity for like people of my generation. And what happened? It happened so freaking fast that I completely missed it. I had whiplash. And I was like, what? We're down, we're up. We're down, we're up. Like it was like the bottom was like a week later. So like it happened so quick. I didn't remember. I couldn't swing at the pitch. It was exactly. a 100-mile-per-hour fastball. I completely missed it. But what are you gonna do?
Remember the day that this happened. This is it, guys. This is COVID.
Yeah,
right?
that was Uncle.
$218.
That was Uncle
Jay.
Jay.
That had happened. Peter was calling me. I had 1 million people calling me, and I said to everybody who would listen to me, "This is a generational buying opportunity. Generational. We don't see. This is once every 30, 40, 50 years that we see something like that happen. It just doesn't happen that often." And when it happened, I said, we are going to make new highs this year. I mean, we're up 100%.
All right. That call is a little bit out there. I'm with you. I'm not sure I'm with you on that. I'm with you on the other one. I'm with you on the buying the generational dips that we get once a decade.
I said we would make new highs for the year.
I mean, you ended up being right. I think that was a harder thing to see, though.
And here's the thing. Here's the thing with the market that we're in now, guys and girls, right? It's a bear market in this market. We could be down 20, 25, 30%, can last 3 days. Whereas there were some bear markets we've been through that lasted 10 years. There there have been times where the S&P returned 0 for a 10-year period.
Yeah.
So,
Yeah.
I don't think we're in that kind of market anymore. Things just happen too quickly. They just do. They happen too quickly. What were we down at the most? 16, 17%. I think we were down at the most, whatever it was.
During the COVID drop? No, I think it was.
No. I'm talking about this
No.
recent drop.
Recent.
Oh, yeah.
No,
recent all-time
It was less than 10.
No.
it was more than
SPY got over 10. Nasdaq, the Qs got to 20%. Qs were officially in a bear
you're
market.
Right. You're right.
Yeah,
But the S&P,
you're right.
the S&P and the Dow were not.
We went
I
from
believe, David, it was around 13.
480 to 411. So 480, that's 69 points.
It's not nothing.
That's like 13, 14%.
Yeah,
That's
it's
about,
not
that's
nothing,
about what
not
it was.
nothing.
Well, less than 5% from all-time highs again, with everything that is going on in this market, right? So that's why, we know we're going to be fine over time. That's just what it is.
Hey, you know what, Black Mage? We'll get Rohan on the show when he is assured this is not a total rug pull. I don't want to share what this is.
I think Brian Blockchain in the comments is doing the same exact thing that Rohan's doing.
All right. I don't want to promote this thing until we know that this is not a total scam. All right. No one say what this thing is called. I don't even know what it's called. I'm not in it. I don't want to be in it. When I know it's not a scam, then we can talk.
Look, it's worth throwing some disposable income at it, whether it works or not. Just
I don't have disposable income. I'm paying $100 for gas every day. I don't have disposable income.
All right,
That's
David.
crazy, right?
Yeah. It's gas.
All right, guys.
I don't even want to talk about gas. David, always great to have you on.
My
Next,
pleasure.
are we back next Tuesday?
We're good Tuesday, yes.
All right, we're good Tuesday. Yeah, because your internet was out, but now it's back. Obviously, it's
Everything's
back now,
good.
so.
I had a guy come
All
out that it was all messed up. Whatever. You
I'm
guys have a
gonna
great
let-
weekend.
All
David,
right.
I'm going to leave you with this stat. I don't know if you've seen this yet. Only
Wait.
2 times. So the S&P 500 has closed up more than 1% 6 out of the last 8 trading days. In the last 80 years, that's happened twice.
Wait. I'm sorry. Start over.
Say that again.
Start over.
S&P 500 has closed up more than 1% 6 out of the last 6 out of the last 8 trading days.
Okay, I'm with you.
So, yeah, 6 out of the last 8 trading days, we've gone up more than 1%. In the
got
last
it.
80 years, that's only happened 2 times.
Yeah.
October 1974 and November 2020.
All
So
right,
I don't know what happened in 1974,
Well,
but
that's
after
what I need to know now. What happened after that?
after November 2020, I checked today, the S&P 500 ran another 35% before we reached the highs in January.
That was the go-go years, David.
What year was
19
that?
The go-go years, like early 70s.
All right, wait. I just pulled up a chart of the S&P in the.
That was when mutual funds became like a big thing, right?
And keep in mind too, 35% then might have been 25 points in the S&P.
Funny how
No,
You know
I'm
what I'm
saying
saying?
I'm saying the more recent time that we had it in November 2020. After that, the S&P.
35%.
Yeah, after that, I don't know what happened after 1974. I'll figure that out. I'll let you guys know before that in the show.
Well,
All right,
we
David.
We go up 35% from here. The spiders are going to be at 600. There you go. Let's hope that happens. All right, guys. Everybody have a great weekend.
All right, David, have a good one.
Pleasure as always.
All right. Okay, so here's the deal. We're gonna have our next guest on when at 12:15, right?
Yep, 5
Okay.
minutes. We've got Brian Goodman, the CEO of Golden Matrix Group, coming on.
I had several people DM me today, being like, "Can you confirm Brian's coming on the show?" I went, "Yeah." Because we had this not with Brian, but we had an incident last week with another company that was supposed
See,
to come.
I wouldn't even gone that far. I would have been like, we have him scheduled. I can't confirm that he's gonna.
You're
do
right.
It. You know,
That's
I'm
what I
not
should have
him.
said.
Like,
That's what I should have said because we don't want to repeat of what happened last week where we won't get into that. But Brian is coming on the show. I can confirm he will be here. Actually, he's here right now, but we're gonna wait for a couple minutes. Before we go any further and before we bring Brian on, what else do we want to say? I wanted to plug a couple of things. First off, did you mention the oil thing? Did you mention why?
Yeah,
You did.
kinda.
The
Mentioned offhandedly there was a fire.
there was a missile strike.
Yeah,
Yeah.
Now it's a fire
Well, yeah, that's what happens
after the strike.
after
yeah.
the strike. Was
Well, you just got to what the
Okay.
result of it.
okay.
we
Yeah,
can
so
talk
there's a
about why it
missile
happened.
strike
Okay,
at a Saudi Aramco facility, and now there's a fire.
who launched the missile?
This has happened before. I don't know. This has happened before. Remember back in? I bet you we could find this in Benzinga Pro. Remember back in like 2000? Oh, was it 20? We had several. There was multiple missile strikes at Saudi Aramco facilities. I bet you I could track it down in pro in like 5 seconds.
I don't remember this. But Spencer, you know how we were talking about what national, like every day is like a national day?
Yeah, you know what today is?
Oh, you already saw this? Damn it.
National Tolkien Reading Day.
Oh, no.
Everyone whip out your copies of Lord of the Rings and The Hobbit.
Wait, is it actually that?
Yes, it's actually that.
That's not what I was going to
I look every day.
That's not what I was going to say.
What were you going to say?
Today's National Peacock Day.
So we should go on streaming and watch.
No, St. Peter's mascot
Oh,
are the peacocks.
okay. I was not following you there.
So I don't know, pretty serendipitous. Peacocks play at night, plus 12.5. National Peacock Day. Take from that what you will.
All right, I'm going back in pro. All I did was I went to my newsfeed and I searched for the term Saudi Aramco, and it was. Oh, I was right. It was January. Was it January 2020?
That's when we.
No.
That's when we killed that dude. Not you and I, like the U.S. That like ICE, some Middle Eastern. That was the first time people were like joking about us going to World War III.
Hold on.
Forget who it was.
So many freaking headlines here. The point is the market recovers. That's the point. That's what I was trying to say. Is if the market moves off of missile strikes because they think there's going to be less supply out there, but they will always. OPEC will always figure out their supply thing. Don't worry about that. So, all right, let's bring on
Soleimani.
Yeah, let's bring on Brian Goodman.
So at the same time.
Yeah. As we've said, he's actually here right now, which is exciting. So we're gonna get him on the show. Golden Matrix CEO. He's been on our show once or twice before, and both times we asked about an uplist, and both times we got a similar answer that it's work in progress, work in progress, work in progress. Well, it's not a work in progress anymore because it happened. So let's bring him on the show and talk about that right now. Let's give him one of our 3. Which intro should he get? 1, 2, or 3? 2. Brian, what's up?
Hey, how are you?
Good. Look, everyone who was tweeting at me saying, "Where's Brian? Is he going to be there? Are you sure?" I would not lie to you. There he is. Thanks for joining us. And it's not even normally when you come on the show, you're in Australia, right? So it's like crazy hours. But right now you're similar. You're in my time zone, which is great. Okay. Whenever I talk to companies that trade on the OTC, we talk about uplists, and they say, yeah, it's sort of out of our control. We followed with the NASDAQ or the NYSE, and then I always want to follow up with them, but I almost never do. In this case, we are following up. So the uplist, it happened. Congratulations. Tell us about the importance of that.
Thank you. So yeah, as you can, I guess you can recall, we had a Q&A section on my last appearance, and I guess 100% of the questions were, when are you when are you going to NASDAQ? So, well, next question, please, because we're nearly there. But anyway, we're here. We made it, and bell ringing ceremony on Friday, next Friday. So even though we're already trading, they couldn't give us a date on the day we went live. But all in all, we're here, and it opens up a load of opportunities for us. Obviously, the company's, I guess, mandate is to get out there and do some acquisitions. We've told the world that we would acquire some synergistic businesses that are profitable and cash positive, and we've already achieved that. I just can't recall whether when I was on your show last that we'd acquired this company called R Kings. It's a UK Irish facing business. It's a sort of similar to a raffle ticket type business, and for us it's a huge acquisition because it's highly profitable, and it has good revenues, and it's a product that we can globalize, so we can roll it out into different jurisdictions, and so all of this is underway. We have applied for a Mexican license. We expecting that in the next 2 weeks or so we'll be granted this license.
Nice.
And that'll allow us to take these products into the Mexican market. But as a NASDAQ listed company, obviously, aside from our amazing support in the retail support, we would look for institutional support as well, and that would hopefully strengthen our stock price ultimately going forward, and it would reflect the performance of the company, because this company, as we've mentioned on a number of occasions, is a profitable company with a throwing off positive cash, which is very unusual for gaming companies. It's something unique in this world, and whilst we run a very conservative company. We've had 14 straight quarters of profitability, and we continue to grow, and we will hopefully for the foreseeable future. And the one thing we didn't have was scale, but we're scaling the company right now. The first acquisition obviously having taken place, and now we're looking to acquire something else that's fairly large, also profitable and cash positive, that'll take us to a whole new world.
Couple of questions on the uplist. One, does NASDAQ ever give any guidance as far as like what took so long, or is that like a black box process where no one knows?
Nobody really knows, and I guess you know, in hindsight, I'm assuming big IPOs, so big end of town IPOs may get preference, because they have a timeline in place. So they have raised money on the back of an IPO and have a date that's been set. So they'd probably get preference, and then also the SPAC world. It was a very unusual time, as you know.
Yeah.
There were, I don't know how many SPACs last year, 600 or something crazy. So all of these SPACs came to market, and so whilst we would have liked to have been confirmed sooner, there's nothing we could do. We just had to wait our turn, and everybody was suspicious that something was wrong, and we would get refused, and that was the difficult part in dealing with all of those questions. But we were confident, and we knew we would get the uplist, but it obviously we weren't able to tell the public that.
Yeah. And then aside from institutional investors being able to potentially buy the stock, because that's what being on an exchange does, are there other benefits that, like, to the company business wise that you get now from being on an exchange?
Yes. So you're talking about acquisitions. Ordinarily, we would not make an acquisition that was burning money or wasn't profitable. So those are the two first factors. The next factor is these acquisitions, the existing management or ownership would have to have skin in the game. And in order for them to have skin in the game, a lot of these successful companies that we're looking to acquire would want NASDAQ stock. So on the other hand, they wouldn't be doing a deal on the basis of, call it 1/3 cash, 2/3 stock. The stock would need to be, a NASDAQ stock, and
so
that helps us.
Yeah. So you up till now you haven't really been able to use your stock as a currency, but now you can.
Exactly. Yeah. So that's it. And the other thing is that also what we'd like to do in some transactions is do some part of the transaction in debt, because we throw off a lot of money, and these transactions in themselves throw off huge amounts of money, cash. So it's better to do a portion in, if not all of it, in debt rather than in equity. And so if there's a mixture, that's fine. But these are the things that are beneficial in being on a national exchange.
Question from the chat right now. Let's go with Bob. There's a few questions here. Let's go with Thris and Sim? What? Direction Sim. Okay. How does Brian plan to get GMGI more exposure?
All right. So we I'm sitting here.
It's a broad question. It's a broad question.
So I'm going to appear on shows, and I'm going to, do whatever I can. We're out there. We're going to ramp up our social media. Influencers and social media are a huge component now of exposure, and so we're ramping up that component of it. People are dressing me up in Mexican outfits and putting these pictures out of me and that kind of stuff, which brings in a lot of eyes on the stock. But I'm in New York right now. I'm here for the bell ringing ceremony, but also I'm visiting. I have multiple meetings every day. I'm seeing analysts and I'm seeing banks, and these banks have analysts. So so all in all, it's knocking on doors.
The analyst seems like it would be more important than a lot of the other stuff, because the analysts, they're the proxy to the money, to the hedge funds and pension funds and et cetera. They're oftentimes the gatekeeper, right, to ideas.
Exactly.
So, yeah,
and they wouldn't talk to us before, a lot of these analysts, and to get in the boardrooms right now, we've all of a sudden, whole world has opened up for us, and we're going to make ourselves available and tell people about our story. And our story is a really strong one. And we never not delivered on anything we've set out to deliver. So we're lucky in that way.
All right, Brian Goodman, I'll let you get back to those meetings. CEO of Golden Matrix Group, thank you so much for joining us today on Benzinga Live.
Talk to you soon.
All right, and everyone in the chat, I just have a question for you, and it can be about Golden Matrix or anything else, but I'm just curious, what is it about either Golden Matrix or any company or any stock, anyone out there that you love so much? Because I think it's super cool that like everyday investors I've become like super active, right? And I know activist is not the word, but they've become super active. They care. They want to talk to the CEO. They want to hear from the CEO. They have ideas for the CEO. And you hear that historically from like, hedge funds. I think it's freaking awesome that like everyday retail investors are also like taking an interest in individual stocks. And I'm just curious, what is it about this company? But if it's not that company, if there's another one that you also feel this way about, I'm just curious, what is it about it that has you also enthralled? I love it. Because I myself am not particularly enthralled. I'm like, you guys know, I'm more of an ETF guy. I talk about ETFs. I love ETFs, right? That's how I approach investing, is through, and I own a couple of stocks, but it's mostly just ETFs because that's what I like to do. I'm just curious, what is it about Golden Matrix or any other stock that has you also so maybe our next guest can speak to that to some extent, because he's also got like the psychological angle here. Speaking of our next guest, he's joining us from the other side of the world right now. I think it's like 1 a.m. He's in Japan. I think it's 1 a.m. where Ken Honda is. So he is up in the middle of the night to hang out with us, which I think is super cool.
Yeah, I'm excited for this one, Spencer. I think I've talked about it with Chris Capri on the show a lot, kind of about just the idea of how to invest in a way that's not like emotionally taxing, and kind of how to find that peace with where your money's at and how it's invested. Because at the end of the day, if you're investing in stocks, like no matter what stocks you're buying, stocks are risk assets. So if you're out there investing, but it's taking this like emotional tax, whatever, and it's stressful on you, then maybe it's not worth whatever. So I'm excited to talk to Ken about his the writings he's done, the books he's published on the subject, and what he thinks about the psychology of money, kind of.
Before we bring him on, I guess someone asked in the chat about what ETFs I own. Let me just bring up a Benzinga Pro watch list of all the stocks and ETFs that I own. Okay. And I've gone through this before, and I just want to say for anyone that doesn't know that these top two, VOO and VEU, this is where 60% of my money is. It's basically it's like 40. It's always changing, but I think this is like 42% VOO, and I think now it's like 18 or 17 or 16% VEU. The rest of these guys are all between 1 and 6% of my portfolio, right? But the vast majority of my investable taxable income is in these guys, VOO, VEU. And then I've got SRVRs, a small one, PSCI, some industrials. I got clean energy. Actually, I think I sold that. I may have sold that at a tax loss last year. I've got 5G, esports, ESPO. I've got CIBR, CyberArk. I got a little bit of Kathy in there, ARKW. That's it as far as ETFs. It's not super complicated. All right. Should we bring Ken Honda on?
Let's do it.
All right. Let's give Ken a special intro. Ken Honda, the Zen Millionaire. Welcome to the show.
Hello, Spencer and Aaron. How are you?
Good. What time is it for you right now?
It's 1:30 a.m. That's your future tonight.
How is life in the future? Should I be concerned? Or are we good?
I just had a little nap, so I'm just trying to wake up. But
All right.
I
Cool.
did see someone else in the audience. Someone else in the chat said they were joining. Manfa from Japan as well. So, welcome. We love having an international audience.
Thank you for inviting me.
So one of the reasons we thought this could be fun is because we talk not a lot about the emotional, psychological component of money, right? Whether it's investing or starting a business or trading, that's obviously very, very emotional. How did you come to realize that the emotional relationship with money was going to be like what separated you, or how did you come to like the realization that you needed to be aware of how you were feeling about your money?
I was lucky that my father was a very successful tax accountant, so he started to teach me about money since I was 6 or 7. So
Wow.
I had a very good early education. That's why I could retire at the age 29. I had enough money for the rest of my life, so I could retire happily, and which I did for 4 years. When we found out that my wife and I found out that she is pregnant with my daughter, which is about 20 years ago. And during the process of semi-retirement, I spent 4 years as an investor. So I understand what's involved in there too. That was a .com age. So I had very good time doing that. But at the same time, I realized that my fellow investors, they make a lot of money and they lose it all. So I've seen ups and downs of life as an investor. And at the same time, I've interviewed many multimillionaires and billionaires, and I had lots of time during semi-retirement time. And I just found out that peace of mind is very important, and it's not for sale. And you have to be careful. Otherwise, you might make millions. In the process, you gain a lot of stress for trading.
Yeah. Okay. So how do Aaron and I become Zen like you?
Yeah, is it like, I'm curious, about that.
I think that's the question.
Is it like through practice of like meditation, or is it more just understanding how money, like my value isn't tied to my portfolio?
Yeah, it's kind of hard, right? My mentor is Wahei Takeda, who passed away a few years ago at the age 84. He was called Warren Buffett of Japan. And he was once a major shareholder of more than 100 public companies in Japan. So he knew how to invest well. But the interesting thing is, like, he didn't have a computer, and he had only like this book of charts. And then he was flipping through the chart, and he just picked a few stocks and held it tight. He was a long-term investor for the category. And he said, if you have, it's like a Warren Buffett again, that if you have a portion of a company, and if you know company grows every day and every week and every month, you have nothing to worry about because stocks could go up and down. So you really have to cut off the ups and downs, and also cut that out emotionally. Otherwise, you'll be tied to the smartphone, and you need to check out your stock portfolio every
Yeah.
15 minutes.
Yeah. Yeah. But how do you do that though? That's easier said than done.
Yes, so true. I've been there, so I understand exactly. So I think the most important thing I learned from him is a millionaire mentality. Some people go up and down, and they just kind of go down the toilet because they're gambling. So even though two investors, they look identical, one is a true investor, the other is a gambler. Gamblers are destined to lose, and investors are destined to win. So you really have to have this mentality as an investor, and it's a little bit different from investing and trading too. If you
Right.
professionalist trading, it's a little bit different story. But if you think of a long-term success, you really have to have the strong mentality, and to do that, you really have to know when to invest, when to withdraw, and that's what he used to tell me. And it's very important, and how long-term trend goes up and down, so you don't have to worry about it everyday life, because it's like your body condition. Someday you
Sure.
feel good, someday you feel bad. But if you are eating lousy food and don't exercise, you end up losing health. It's the same thing. So if you eat
Sure.
well and live healthy every day, you end up being very healthy.
So that's for investing, but what about just money as a whole though? Because lots of people, what's the old cliche is like the miserable millionaire, or
Mhm.
people that are rich or just have all the stuff and all the nice cars and they're miserable
More money,
deep
more
down.
problems.
More money, more problems. The urban philosopher Biggie Small said that, right?
Yep.
Yeah.
Yeah.
So how do you negotiate that problem? Because some people without a lot of money are very happy.
Yes, you said it right. I met them and also interviewed them. One of my favorite questions is, when did you start feeling wealthy? Is that time that your company went public, or did you reach $10 million? Did you reach $100 million, or did you reach 1 billion? And the questions, the answers I was expecting is when I was 25 or when I was 31, and some of them said, I don't think I'm wealthy. That this person has a public company and definitely multimillionaires. But and I asked him why, and he said, I don't have a private jet. And I said, oh, really? Is that the thing? And I interviewed a person with a private jet, and he said, I'm not wealthy. My private jet is so small; it seats only 6 people. So the most important thing is, you have to know when is enough. It's more zen in that sense. Some people are born with a certain money container, the size. If you're born with a small one, you shouldn't make it. You shouldn't try to make it too big, too fast, because it's going to crack. So you really have to know what your right size is. Otherwise, you're going to speculate with your own money. So my advice to a lot of people is, grow rich slowly. That is a sure way. Don't try to make it in a few years. At least you should have 5 years or like a 10-year portfolio. And I think the most easy bet is own a profitable business and do investing on the side, so you can sleep well. If you're a professional day trader, or if you're a professional investor, it's almost you're destined to lose peace of mind. But if you just own a good cash flow business, and then invest overflow cash for investing, you can sleep well, and then your portfolio will grow. So I think ideally, if you want to be a success, you have two wheels. So that way, if one wheels fail, still you can go keep on running. So own your own business, preferably cash related business. I mean, at least steady income can be expected. So if you have that, you will not lose peace of mind.
When did you start feeling wealthy?
I think I started to feel wealthy when I was 25. I realized that, oh, I had enough clients and I had enough investment. So I don't have to be a super millionaire. And then I also felt like I had enough great friends who can support me. So the reason why I'm not afraid or I don't have much money stress is that I realized that I have more than 50 friends who let me stay for a week for free. So if I lose everything in the future, if I could visit my friend 1 week, one person at a time, if you have 52 friends, you can go around your friends for a whole year.
I've never thought about this before, but this is an interesting exercise. All right.
Yeah.
All right.
I got to start counting to see.
I
if
gotta
can
start
get it to
counting
52.
too. Let's see. I got
Yeah.
Aaron.
Brent.
Or you can
Could I
count me
crash at
in.
your place for a week? All right. There's one right there. Brent just said I could crash at his place for
Yeah.
a week.
Yeah. I gotta start going through the list to see who would let me stay there for a week. I don't know if it's
Yeah.
50 people.
Think about
Well, Ken,
that.
that's a great point. I think this has been a great conversation about kind of how we can try to take some, and a lot of it, yeah, it's easier said than done. Like you said, I mean, like relating it back to your physical health. If you eat healthy and exercise every day, you're more likely that your body's going to feel better than if you're,
Mhm.
excuse me, leading an unhealthy lifestyle. But a lot of it's easier said than done. So what are some tips you would give, just some, for people that can't just tomorrow own a positive cash flow business? What are some tips you would give them to try to alleviate some stress off how they think about money in their lives?
Yes. No, I have published more than 200 books in the last 2 decades of my
Wow.
career, and I sold about 8 million copies. And the most popular one is How to Make Money by Using Your Gifts. So if you don't have a lot of assets, you have to use your own, which means you use your gifts. So find what you're good at and combine your gifts. Like you could be a great talker, you could be a great listener, you could be a great salesperson. You have to do what you love so you don't have to work another day anymore. So do what you love and make sure that money follows you. That's the title of my national bestseller in Japan. So you have to do it well and you have to fall in love with what you do so people will notice you. And if you do it with certain enthusiasm, certain passion, and then do it for at least 2 or 3 years, you have enough clientele so you can live off of the income that your clients support. So create your own fan club. I have one of the largest online salon. I have more than 10,000 people supporting me every month. So if you create a fan club for your own, it could be 200 people, 300 people. But if each person pays $10 or $20 per month, and if they just stick with you, you don't have to worry about money for the rest of your life. So do what you love and let people support you. That is a shortcut to be a millionaire.
That's it.
Did you feel like writing was one of your gifts?
No, that is strange because I started writing when I was 33, and so I shocked everybody. My parents were surprised, and my brother and sister, and also my best friends, my school teacher, they were so surprised that I became a writer. But I had passion. I wanted to write about happiness and money because it's very important. If you lose your happiness, what is the money for? So I had so much passion about teaching people how to find peace and how to transform your relationship with money. So that's what I was good at. I was a good speaker and I was a good writer. At the time I didn't know those things at all. But after that, people started talk about me. So I printed the booklets on my own. So I self-published with 3,000 copies, but by word of mouth, I printed another 5,000, another 5,000, and by the time I gave away 100,000 copies of my free booklet, a publisher called me, and the rest is a history. So I was asked to write a book, and then I became a national celebrity in this field.
All right. This has been a lot of fun. Ken Honda, the Zen Millionaire, again, joining us at 1 a.m. his time. So thanks for this. And I enjoy this. Thanks for coming on the show
hopefully,
today.
hopefully,
right.
Ken, we'll get to have you on the show again sometime in the future.
Okay, thank you. Thank you
we're
both.
when we are all Zen ourselves. I just chuckled there. I just chuckled in the chat, or just now, because I saw a comment in the chat from Hot Dog, which I thought was funny. This is my problem, Hot Dog. What do you do if you're insufferable? That's my problem. I don't know. I don't know what you do if you're insufferable. I don't know. But that was good. That was good.
If you're, to be honest, like on that, like to be serious on that comment for a second, I hope that was a joke. But if
I've been told I make a very bad first impression. Some of my best friends said I make a terrible first impression.
Really?
Yeah.
I can't remember. Well, it's weird for me because I
Yeah.
interacted with you like remotely on Slack before I met you, so I
Yeah,
feel
that's
like
weird.
it's harder. But it's good to believe that like there is some meritocracy out there, right? You do a good job, you're gonna get
Yeah.
promoted at your job, at your work, or vice versa. If you do a bad job, you're gonna get fired, whatever. But being likable, I think, is important. Like there's always going to be some sort of politics involved in that meritocracy where it's like, yeah, like if two people do an equal job, but one person is a little bit friendlier, or they smile a little bit more, whatever, then that person will oftentimes get the edge, whether they do a better job or not.
One of the biggest lessons I've learned just in working, right, really since I left college, was being easy to work with is a skill.
Right.
Right? Just being easy to work with helps so much more than not being easy to work with. Anyway, that has nothing to do with what we're talking about feeling Zen, but I don't know. That was a really good interview. I think so you know what I mentioned that I'm reading that book, The Psychology of Money.
Yes.
I'm almost done with it now. I've got like 40 pages left.
Okay.
I'm probably gonna
Who's
have
it by again?
It's by a guy named Morgan Housel.
Okay.
I'm probably gonna have to reread it because there's so much good. I'm probably gonna read it again with like a highlighter because I want to like go through and like highlight like the really important stuff that I like a lot. It's full of so many nuggets. That's it. It's just chock full of nuggets of little pearls of wisdom. These little chicken nuggets of wisdom about how to feel about your money, about investing, about saving. It's called The Psychology of Money. It's fantastic. Can't recommend it enough. Yeah. Anyway, just wanted to say that. You know what else I watched? Finally.
What's
The,
that?
I
The Carl Icahn documentary.
I watched the Carl Icahn documentary. Finally, I watched it 2 or 3 nights ago. I enjoyed it very much. That's all I have to say about that. It was very good. Although it made me a little uncomfortable. One part of it made me a little uncomfortable. And the part that I got kind of squirmy watching was it was basically every time a financial media person was on, because he had several people from CNBC and Bloomberg and other reporters on, and I could almost feel the reporters try to come off as playing both sides. How do I phrase this? I can almost feel like they were trying to not come off as like super insidery Wall Street, as if they don't cater to an audience of millionaires, right? Every day for their jobs. I could feel them trying to appeal to the everyman or woman. And it made me uncomfortable because I don't want to like look back and think like, oh, I only cared about the stock market. I only cared about like this narrow thing. There's so much more to life. Like I think it was Andrew Ross Sorkin who said in the documentary, right? Carl Icahn has made a lot of money for a lot of people, but does that mean he's done good, right? Because there's more to life than money. Has he done good socially? Has he done good for the long-term health of these businesses? That is more up for debate. And I don't know. I felt like I just don't want to look back at myself and think, oh, I only cared about the stock market and the money, because there's more to life than that. So I don't know if that made any sense at all. But
Yeah, I just thought it was. Yeah, I thought the whole show or the whole documentary was very interesting, just in terms of I didn't realize that he had kind of revolutionized, or like was one of the first so-called like activist investor, where they came in.
yeah.
Originally, they were called corporate raiders, and where essentially he would come in and take over enough shares to where he got a seat on the board, or at least had some sort of say, influence, and make the changes happen that he wanted to see in these companies. And I think in doing that in 30, 40 years, you're not going to do everything
right,
quote unquote right.
Yeah.
But you'll make some mistakes. You'll make some good investments. And I think the story is very interesting. I'll have to go back and watch it. I didn't really notice that about the journalist.
Maybe it was just my own insecurities. I just don't want it to look back and think, oh, I only cared about the money, and I totally ignored like the social cost of all this stuff that we do every day. But whatever. Before we bring on our next guest, we're going to have Dave Mazza from Direction on at 1:00. We still haven't really talked about the market at all, which we have to. I guess we did with David, but
did we ever get more clarity on the Apple headline from yesterday? That's what I'm curious about.
I didn't.
I didn't either.
Did we get more clarity? Did anyone get more clarity? If you did, let me know.
Yeah, let me know in the chat if you got more clarity, because I certainly...
Because we always say at Benzinga, nothing clarifies like clarity. That is a true thing that we say at this company. And by we, I mean Jason Raznick says that. And Aaron can back me up on that. All right, let's do this. Let's do a quick crypto update. Then let's quickly mention the Benzinga Stock Market Madness contest. Then we'll talk some stocks. Then we'll bring Dave on the show. So where's my heat map? There it is. Where's my crypto thing? There it is. All right. Only seeing a little bit of green here, right? You're seeing Bitcoin, ETH, and FTX token. Although ETH is basically flat. Actually, Bitcoin's basically flat too. If you're up less than 1%, I call that flat. Most of the crypto market is down. This is, again, this heat map, as I understand it, is a rolling 24-hour heat map.
Correct.
So it's not necessarily indicative of what's happened since midnight. It's a rolling 24-hour thing. So we were green yesterday. We're red today. I don't know. Them's the breaks. I am coming up on my my monthly recurring purchase of Bitcoin and Ethereum, which is cool. And while we're on the topic of crypto, I want to mention that we are starting to do a lot more crypto stuff on the Twitter Spaces front. There seems to be a lot more. The crypto audience seems to be much more present on Spaces than it does on YouTube. So check us out. Follow us on Twitter. Check us out. We're basically doing Spaces, I think, almost every day at this point, and a lot of them are going to be about crypto, especially in the evenings. So hey, shameless plug. Check us out. Follow us on Twitter, and check out our Spaces. We're doing a lot of crypto stuff there. As a reminder, if you want a free Bitcoin, go to Voyager. Use the code ZING, Z-I-N-G, when you open your account. Fund your account with at least $100. Make a trade. Any trade will do. And then they will send you $50 in free Bitcoin just for doing that. Second thing I want to plug is the Benzinga Stock Market Madness contest thing. I definitely butchered that, but that's okay. It's Stock Market Madness, okay? So let's bring it up on the screen. We are in round 3, I think. Round 3. Voting ends on Saturday for round 3. Let's get it up on the screen here. And here's the link. Making sure I got the link for you up in the chat or on the screen. It's benzinga.com/stock-market. We are giving away prizes. We are giving away $1,000 worth of Bitcoin to the person that gets the most correct answers. It's just like a bracket. You pick your winner, and whoever picks the most correct winners at advance will get free Bitcoin. Winners are going to be announced April 11th. So we are in round 3. We are into the final, I guess this is the Elite 8. This is what we're in right now. We got in the EV region, Tesla versus Moran. Who do we got, Aaron? Tesla.
I'll take, sure.
We'll go with Tesla. All right. In the, this is still the, oh no, we're not in the, we're in the Sweet 16. GM or Ford to go up against
Ford.
the winner of Moran. Ford, that was quick. All right. Fine. Ford. Let's go down to the healthcare region. Pfizer versus Eli Lilly.
Ooh, give me Eli Lilly.
Yeah, the man says. All right, that's what the man says. CVS versus Moderna.
Moderna.
I feel like this is cheating. I feel like for everyone that's watching this right now because they're seeing.
You're not supposed to. I don't think you're trying to guess the winners. I think you're trying to just vote what you.
No, but after you click bullish, it reveals the percentage that people have voted.
I know, but are you voting like trying to guess what people are guessing, or just voting for what you would vote for?
Well, in theory, wouldn't it be both? No. No, you're voting for the crowd. But wouldn't it be both in theory?
No, I'm saying
No.
I'm just saying vote for whichever one you would vote for, and like whatever the percentages there are. I don't think you're trying to fill. It's not like you're filling out a March. Well,
No.
We would have to do it
you're,
at the beginning.
No, you're voting for the crowd. You're voting with the crowd, man. You're voting like who do you think the crowd's voting for? So
then everyone's voting on what they think other people are voting for.
that's what the crowd is,
I'm lost.
right?
I'm lost.
What's so confusing about that? All right, whatever.
Okay.
I'm not going to fill out the rest of the bracket because that's cheating. But go to the link that's on the screen. Check it out. Fill out the bracket. We're giving away $1,000 worth of Bitcoin. Do you want to mention that this contest is sponsored by Public? Public.com is the investing platform where you can build a modern day portfolio your way. Invest in stocks, ETFs, and crypto all in one place. So start investing today. And while you're at it, cast your vote for Stock Market Madness. Thanks to Public for sponsoring that contest, which Aaron and I just did a horrible job of promoting, but them's the breaks. Wait, I'm catching up on the chat. Sorry. Wait, what's the chat saying? How's March Madness? Zunaid's mom wants to know. Last night was interesting, wasn't it?
It was. I watched.
You watched Gonzaga?
I watched all the games.
No way.
Yeah,
How late were you up?
until like 12:30.
How can you stay up that late? Because you don't wake up at 5 like I do.
No, I don't
Oh
wake up at
man,
5.
I was passed out by halftime of the Duke game.
Yeah, actually, that is one of the worst things about like since I moved here to Detroit in the Eastern time zone. Like I was thinking about that last night because the game started at 10 p.m. our time. If I was back home in St. Louis, it would have started at 9 p.m. That's a big difference. The game ending at like 11:30 versus 12:30.
Bummer. Yeah. Anyway, we were wrong on our Duke Texas Tech and
Who's we? I think I said I like.
Right.
I like Duke. I said I would go back and play the tape.
I was
said
wrong.
the only thing I was wrong.
and Gonzaga really bummed me out. Really, I was bummed out last night by Gonzaga. I'm not gonna lie. I don't know why. I didn't think that was gonna happen, but then the game was over and I was all sad. So, oh man, what does that even mean, Ash? I don't even know what that means.
What Ashley? Spence has the mind of a 50-year-old and the body of a 20-year-old.
Maybe I don't know. I have a body of like a middle-aged man, but that's all right. Yeah. Okay. So wait, let's talk markets here overall. I know we made that big move. That was when David was on.
Big move to the upside or downside?
Big move to the downside. That was before David. That was before David. Let's bring up a chart of the SPY here.
I got absolutely screwed on a trade I was in.
Today? Yesterday?
Both.
Both?
Well,
Same trade.
I was in it. Yeah, same trade. Yesterday, I bought some. Let me try to find this. I bought some Apple calls in the morning when Apple was at about $171, and it ended up running all the way to like 174. So my calls were up like more than 100%, but I couldn't close them in the same day since due to my PDT whatever. So today
PDT
Apple
rule.
opened down, and the calls just like obviously got crushed. But I was like, oh, let me hang on to them for a sec, see if Apple comes back. Came back a little bit, then started moving lower again. So I sold them, and then of course, like right after I sold them, Apple came back higher. But now Apple's trading down again, down 0.5%.
Yeah. How's Moderna doing today? Because apparently, that's so interesting. Moderna's down 8%. Let me look at the other vaccine stocks quickly. BNTX also down. Pfizer, which is more diversified. And then what's the other one? Novavax, NVAX, right?
Yep.
Was there a headline here that I missed, guys? There was a Novavax headline from yesterday. We got Brent Slav on the house, by the way.
Brentster
back in the office. I would have assumed if I go back to the charts, I would have assumed that those would all be up today because cases are spiking very, very badly in Shanghai. So I would have presumed that the stocks would react to that. But
I would not be buying any stocks for any like sort of COVID play now. I do like Moderna long term, but I've said this many times. Like my bull case is that it's more than simply a COVID play, and it got maybe not unfairly benefited from COVID, but it benefited so much that it was definitely overextended. But now I believe has gotten
mRNA play
now gotten punished too much.
Go to a weekly on this Moderna chart. Oh man.
Well, I don't know. Maybe it still is a little expensive. Either way, long term.
Head and shoulders. We haven't gotten the shoulder yet. The right shoulder. That's a big head.
Yeah. I don't think the head on Head and Shoulders patterns are typically like 300% higher than.
Oh man. Ash Invest. No, I haven't. I try not to pay attention to like other FinTwit YouTubers because it hurts my brain. Daniel, what do you guys think about Home Depot? Yeah.
I like Lowe's more than Home Depot, but these stocks have been ugly this week. Have you seen this? Lowe's is down 10% this week.
Yes. So how I feel about Home Depot or Lowe's would really it's not about that to me as much as it's about the macro home building environment, the housing market right now.
Well,
basically.
We had some people in the chat that are in this industry the other day when we were talking about these stocks, and they were saying I was silly because I was talking about Home Depot and Lowe's, saying that we were talking about the housing shortage. You know, I do think, look, you have interest rates rising, and that's been crushing the home builders. But do people act like we're just not going to build any homes once interest rates get to 2%?
I think we can't. I think that's the problem. Can't.
There are supply issues right now that are like between like getting siding and windows and shit is making it virtually impossible to build a house right now.
So we can't.
Do we act like that's going to happen? That's going to continue forever? That these like issues with the materials needed to build a house are never going to suppliers are never going to, be able to fix that. Like, to me, it's just getting so over the idea that, like, we're not building houses right now. I don't think that's true. Like, you drive around neighborhoods and stuff, I see houses being built all the time.
You do? I don't. I don't drive
maybe
around.
Maybe not here as much as back home, but when I was back home, like, I feel like maybe it's just because there's a couple new houses being built in my neighborhood. I don't know. Either way. But the flip side to this is Home Depot and Lowe's are more remodeling, do-it-yourself plays than they are new house being built plays. So if that's true that we can't build new houses, I would think Home Depot and Lowe's would get a lot of business from people that are fixing up their older homes because they can't build new ones.
This would be sort of an inverse play. If you think that inflation is going to go down, if you think the economy is going to be strong, then you should like a stock like Home Depot. But if you don't, if you're worried about inflation, if you think we're headed for, a longer term downtrend in the economy, just a slowing down of growth, we're at a later stage of the economic cycle. If you think all of these problems that everyone tries to sell you, if you think they're real and that they're going to persist, then you probably shouldn't like Home Depot, because who's remodeling their home when they're paying more money for everything in their life ever, right?
Yeah.
So it's not really about like the individual chart or the individual company per se. It's more about how do you feel about like the broader environment right now? We just came out of an environment where everybody and their mother was refinancing their house and remodeling their home because they were all trapped inside.
So that means you had a house?
I don't own my home, man.
Oh.
Every homeowner, I mean.
Oh.
If you could, you refinanced and you did home improvement in the last 2 years. You did, because you were stuck, right? But now you're not stuck anymore, and now you're paying more money for everything else.
I'm just more in the camp that, look, these like supply issues that are making building homes so impossible right now
you're saying they're short term?
Transitory.
That's a good word. Where'd you come up with that word?
Just made it up.
Made it up?
Oh, did you know? I was having this discussion
That's
last night.
a good word.
I actually haven't fact checked this. Apparently, is physicality like a made up word that announcers made up?
It could be.
Saying like, oh, look at the physicality. Last night they were saying, look at the verticality.
Yeah.
And I was like, there's no way that's a word. And then Gene Steratore or whatever came on and said verticality as well. And I was like, there's no way that's a word. But I haven't looked it up to see if it is a word or not.
Outside, if you only watched football, you would assume that the word matriculate is a well-worn word, but no one uses that word outside of football.
Matriculate? I don't even know what that means in football.
If you matriculate the ball down the field, you've
know.
heard that before.
I don't know.
Yeah, the teams, they get the ball and they matriculate down the field.
They're
But
like dicing up the defense.
no one uses that word, matriculate. It's like
I've never heard
football
that
thing. Anyway, the point was, how do you feel about the housing market and the economy? That's how you should feel about Home Depot and Lowe's. It's probably not a great time to be doing home reno right now. Actually, it definitely is not a good time to be doing that. So, I don't know. It's tough.
Oh, well, also, all
matriculate. I'll spell it out for you. Matriculate.
While all like commodity prices are
Whatever.
rising,
Yeah.
lumber's actually been going down. And I think part of it is because people are like, well, we're not going to buy lumber to build homes because we can't buy any of the other shit to build the homes anyway.
Going down. I don't know if it's going down. I think it's doing this, right?
I don't know. Let me check.
I think it's doing that. And the futures is not indicative of like what people are paying for their lumber. Anyway, let's bring on our next guest, Dave Mazza, head of product at Direxion. We were doing these recurring segments where we talk about leverage ETFs and how to use them. We've done these recurring segments with options experts, with short selling experts, and our latest segment here is all about leverage ETFs because people use them and they need to use them correctly. And we get lots of questions about these products. How do they work? When should I use them? That's what Dave is here for. Let's get him on the show right now and talk about this. I'm feeling good all of a sudden. Dave, how's it going, man?
Going well. Happy to be back.
Happy to have you back. How was the week?
It was pretty solid. We've made it through. A little vol, but that's the environment we find ourselves in.
Yeah. So before we go, I want to recap a little bit of what we discussed on our last segment. We talked a little bit about how leverage ETFs are built and what happens from day to day in terms of the daily rebalancing of the leverage. Can you just recap that quickly?
Yeah, I'd say in a couple minutes here, the way to think about it is that a leveraged ETF provides amplified exposure, both either on the bull side or the bear side. Excuse me. And what does amplified exposure mean? Simply put, for $100, if it's a 2x fund, you're going to have $200 of exposure. 3x fund, $300 of exposure. But it's important to remember that exposure is intended exposure is put on a daily basis. So the return at 1% amplified to 3% or what have you happens on a daily basis. So these tools are really intended for people who have the ability to make buy, sell, or hold decisions on a daily basis, because their long-term return may not match the amplified exposure of an index over a week, over a month, particularly over longer time periods, because of either the potential positive impacts or many cases the negative impacts of compounding, especially in volatile markets. So that's really generally kind of the high level structure.
Yeah.
And then also with these products, it's really important to be, just like any ETF, to focus on looking at what is the net asset value of the ETF, what is the indicative net asset value, or otherwise known as the INAV, compared to the market price, so that you can have kind of greater certainty when placing buy and sell orders.
We touched on the INAV and the NAV briefly before as well, but again, just to recap, because those are the numbers that you kind of have to look at. It's sort of the equivalent of, like, it's like the leverage ETF equivalent of, like, what would you say it is, like fair value ish number? That seems about right. Sure. Explain the INAV and why that's important.
So the ETF structure is a really interesting one and a resilient one, where essentially it combines, again, for folks who know this, but for folks who don't, the benefits of a mutual fund, a pooled basket of securities with a single stock. Combine those two together. ETFs trade throughout the day in an exchange. But like a mutual fund, the actual assets of the ETF, and this is for a leverage ETF or a one beta ETF, fixed income, equities, commodities, everything in between, has essentially a value, and that's the net asset value. And every day, that value is determined at the end of the day. But throughout the day, ETF providers and index providers and exchanges publish the indicative net asset value. So basically a fair value, if you want to use that term, if that's easy to understand, of what those securities are being priced on a daily basis. Sorry, intraday. But the market, buyers and sellers, are actually the ones meeting on exchange determining the prices. And the benefit of the ETF is that, unlike a closed-end fund, which has a fixed number of shares, ETFs tend to have their net asset value, the indicative net asset value on a daily basis, and the market price tend to trade fairly closely together, because market makers are coming in to arbitrage that difference, which the benefit, that sounds maybe scary, but the benefit to a retail investor or anyone really is that you can have pretty great certainty that the price you're going to be getting is close to what the net asset value may be. However, it's incumbent upon the trader to use that information so that you can have certainty, again, of when you're placing orders, especially in volatile markets, and around the opening and closing of a particular ETF, really 9:30 and 4.
Yeah, it comes down to knowing whether you're going to, if you buy some or sell something, are you going to get a price that matches up with the underlying, with what's in the fund, right? Are you going to get a fair price?
Correct.
Yeah. All right. Let's talk about who and when to use these, and who should be using these. So let's start with the when. What type of market environments are best suited for leveraged and inverse funds?
Well, this is not intended to be a cop-out, but they have a utility in any type of market environment, right? Whether it's uptrending, downtrending, or volatile, like we've seen ourselves. But their behavior and the way you use them may need to differ depending upon that environment. Why is that the case? Because in a volatile market, that, again, these returns are done on a daily basis. So I might be up one day, down one day, up again, down 2 days in a row. And frankly, since November, that's sort of the market we've been in. And with that, why I emphasize that is that that's when someone, again, needs to have the ability to be monitoring their positions, because these funds can go the wrong way on you if you're ill positioned, or if you're lucky, they could go the right way. But if you can't be focusing on it using that kind of short-term trader's mindset, difficult to use these products in a volatile market, because we can't, again, and we're coming at this from, we're the provider of these. We're structuring them, we're creating them, we're offering and marketing them to to traders. We want people to understand them and use them appropriately, which is, why I love the opportunity to be on this show. But in a volatile market, for example, what we've been seeing is that people there's a camp right now where they're continuing to buy into the market. So actually looking at SPXL, but then also SPXS, which you have up here, which is the bear fund. So a bull versus bear has seen an increase in activity too, because we have kind of, again, this risk on versus risk off camp, and it's playing out on a daily basis. So in volatile markets, I want people to think about both the bull fund and the bear fund. But I also, if you generally have a bullish tone, think about, if we're thinking on the industry level, think about semiconductors versus travel and vacation versus metals and mining, gold miners, what have you. There's a whole pool. We have a large suite of products for traders to be able to make that rotate decision depending upon what's happening in the market. So you don't necessarily have to only have growth be working or tech be working for these products to work for you. But again, if you don't have the ability to monitor that, then you can get on the wrong side relatively quickly.
But I guess what I'm asking is, how can the performance of these differ in a trending market where we're up pretty consistently for a couple weeks or a couple months, or down, or a market where it's just an endless chop fest, kind of like we have in the last few months?
So in a trending market, that's generally when you see that positive compounding, meaning that when I'm re-leveraging the product, or when we're re-leveraging it, we're actually continuing to buy higher. And you tend to see you have positive tracking, right? So you actually might be doing better than the hypothetical 3 times return of the index. However, if you're in a downtrending environment and you own the bull fund, you're going to be hurt. But if you own the bear fund, you're going to benefit from that. So, of course, uptrending benefits bulls. But if you're trying to take that opposite position in the bear fund, you're going to see that negative compounding come into play. So there you gotta think about your market environment. The choppiness we've been in is, again, when you can really see the performance deviate over longer time periods. So even a 2-3 day period, you might not see tight tracking because the compounding works against you in volatility. So you really have to understand both kind of what the macro environment is, and then how are you going to be positioned for that environment.
Let's talk about like when or who would use these funds. So like, what types of strategies, what types of risk tolerances do you need to have for a leverage ETF to be in play for you?
You got to generally have a pretty high risk tolerance, again, because if you're amplifying exposures, right? So if you get it right, you're going to do better than a simple exposure. If you get it poorly, though, you have the potential that you're going to lose more. So if you don't have high risk tolerance, then these products are probably not right for you. And the other thing, again, and I'll say this ad nauseum, and again, if we don't have the ability to make that daily buy, sell, or hold decision, this isn't just where you put some chips, at the table and walk away. These funds are not, that mindset does not work for these products. And if someone is thinking about using them this way, I really advocate against it. But if you, again, have a kind of universe of whether it's ETFs, stocks that you are comfortable trading, and you say, hey, I have my technical indicators or my fundamental thesis says that the S&P 500 is going to outperform today or over the next handful of days, SPXL could be an opportunity for you. If you conversely believe that the market might fall, then SPXX could be an opportunity for you. But right. if you don't have the ability to do that, and you're not, or even interested in monitoring your portfolio on a very close basis, they might not work as intended. So that really is kind of like first and foremost an appreciation and a comfort in kind of short-term trading strategies. What we tend to see people do is a lot of, like many traders, a heavy focus on technical indicators, but they don't necessarily, in some cases, they're not necessarily these crazy strategies and tools. It's, focusing on things like RSI, focusing on things like, different types of moving averages and things of that nature. We see a lot of folks use these products for that basis. Let's say, hey, I'm positive on semis, for example, I have some exposure to stocks that I like, or I'm using the ETF. But I want to make, I think in the next couple of days, this NVIDIA event, for example, I want to be positioned positively for it. I'm going to own a SOXL for a handful of days. And that's kind of one of the utilities that we see these products have, particularly in event-driven environments. So meaning whether, especially during earnings season, we see on average the volume of these products increase very sharply because they're really used either to amplify positions that folks have, or to do some hedging positions if someone's very long and doesn't want to touch that part of their portfolio.
A question that I get every so often, every few months, and I would like to ask it to you because I struggle with how to respond. This is a long-term chart of the TECL, right? The bullish tech ETF. I don't know, Dave. It looks pretty good to me. Why shouldn't I just buy and hold this thing over a 10-year look? It's gone from under $1 and it got to $90 last year. Someone who looks at this chart, that's what they see. So what do you say to that?
Yeah, no, I'd say, if you're looking at the chart, I can see why you'd be interested in that fund. Those are phenomenal returns. What I do show, if I'm in a meeting with a client or doing a presentation, I then flip to the Tech S chart, and it's going to look a lot different. Tech L benefited because we were in a secular bull market, particularly for technology stocks. And if you look at that chart, it looks basically one way. But if you're not comfortable losing, 40%, if not, there you go, 50% of your investment in a short period of time, that chart doesn't look very attractive. And this in particular is the downside here. So let's say, hey, tech's overvalued. Market's already run its course. It's another tech bubble, what have you. I'm going to go bearish. Well, very quickly, even in the 2009 period, as we came out of the financial crisis, much of the value of that portfolio.
So I think maybe the good answer is in hindsight, if you had seen the future and you knew that it was going to be a secular bull market for technology for a decade, then maybe we can talk if you knew the future. But if you don't know the future, then how can you say with any certainty? Because the opposite can equally happen to you.
Correct.
In which case you're out of luck. So, all right, that's what I'm going to do. Next time that someone shows me that, I'm going to pull up the opposite and say, or you're wrong and this happens, because I've never done that, but that's a good one. In terms of strategies, you talked about, a reliance on technical indicators, as people use that as a guide for entry and exits into these things. But more broadly speaking, can you talk about maybe using these as a hedge, or how they would fit into a broader trading or investing strategy?
Yeah. So again, let's set aside the specific indicators that a trader may have, because everyone either has their own, or they maybe follow different folks, or involved with forums, what have you. But let's say I'm a trader, and again, I'll say I primarily use I'm focused on tech, right? So let's just stick with that for a minute. And I got my basket of maybe some of the mega caps, maybe some of the smaller, more emerging technology names, and I'm trading them, and I'm holding those over 3 weeks or a month or what have you. And then maybe sometimes I use the ETF to get my beta exposure, because I don't want to take any more single stock risk there. So we really see our funds, both on the bull side and the bear side, used again to take. I really believe that going into this particular event, the entire sector is going to benefit, or going into a Fed meeting. Those are days where we see a ton of activity in our products, because people are positioning either for the market reaction to be positive or negative. Every week when we see the data released about oil and things of that nature, we see massive activity in our energy and oil and gas products, for good reason, because people are positioning for that event. So one of them is simply just event-driven trading, where again, whatever indicators telling me to go long or go short, what have you, this product is used to kind of give me that extra exposure in that short period of time. But then we also generally see folks use these. These are our primary trading tool for a camp of traders. So they're comfortable with risk. They're comfortable with monitoring their portfolio, and they want the potential to outperform. And so that's a whole nother camp where people just use these products as their kind of ecosystem, and they're going long and short all the time. That's a very reasonable, for the right risk tolerance, and it has to be a high one, very reasonable approach. And then lastly, I think I alluded to this earlier, there is a camp who use the bear products to get that, I'd say, opportunistic hedge, right? Where, I believe over the long term, maybe with the benefit of hindsight, I'm sticking with this, or hey, I'm bullish on this value trade, right? But I'm concerned that Bank of America and Citigroup earnings aren't going to be as great as they were going to be because the yield curve's flattening. Maybe I'll go put some exposure to FAZ, which is a bear financials fund, during that kind of period when they're all releasing earnings right at the beginning of earnings season. That has a utility to traders who, again, might not want to change whatever they're doing on the long side, right? And that could be ETFs, it could be single stocks, it could be what have you. I'm going to port this in as opposed to trying to buy an option or a put or something, and take advantage of the fact that I'm going to hedge my portfolio. And even if they're not, even if that trade doesn't work incredibly well for them, they didn't mess with names that they own and that they want to own for the medium term, long term, what have you. So those are kind of the three biggest camps that we see people using. But the more I talk to traders and get out there, everybody sort of has their own way of looking at them, which I think is great because these products have a lot of different utility for traders who have a high comfort with risk.
Yeah. I want to mention, if you want to learn more, go to direction.com/education. On that page, they have a very good ETF. It's like Direction ETF University that I've taken. You really, I highly recommend, if you're going to use these products, take that interactive. It's not very long at all. It'll take you a couple minutes, right? Take that course. Make sure you understand what is what. Make sure you get the questions right. If you don't get those questions right, then maybe don't consider using them. But it was a really good course, so I recommend it enough. You can find it on the link that's on the screen there. Dave Mazza is managing director, head of product at Direxion. He'll be joining us every week for a segment just about leverage ETFs, and we will take your questions and talk about how they work. So Dave, a pleasure. There's one question from the chat that has nothing to do with what we discussed really, but Mo wants to know if you, meaning Direxion, can make an inverse triple leverage ETF for Kramer.
That is an interesting idea. I'm going to bring that back to the lab, put the code on, and see what I can do. I don't know what trademarks or issues might exist with that, but
I don't know either. I don't know either.
From the chatter I see on social media, I can see there'd be demand for it.
I see it too. Dave, have a great rest of your day. Have a great weekend. We'll talk to you again soon.
Talk soon. Have a good weekend.
All right. I hope no one from CNBC was watching that, because
no one from the street.
No one from this. No, he's not at the street anymore.
Oh,
he's at CNBC. Gosh. Anyway, okay. What's going to happen now? We're going to have a surprise appearance, not a surprise, a regular appearance from Sharon from Benzinga's HR, because Aaron and I are in trouble. No, because she joins us every month or so to talk about her she's beginning her journey as an investor. She's having a kid in like 2 months?
No, more than that, I think.
She's having a kid soon. We got to make sure she has a 529 plan set up. Can we make sure she has
You can ask her.
I'm going to ask her. Is she going to be here today? Is Mark from Litquidity joining us?
No.
Mark is not joining us. I thought he was.
Next week, he'll be back.
Next week, I will not be here. I'll be here, but I won't be here on Friday.
All right.
Did you know that?
I did know that.
You did? Yeah. Next Friday, I'll be in Vegas. If anyone's going to be in Vegas next Friday, slide into my DMs. Let me know. We can meet up. But I'll be in Vegas beginning next Friday for a couple of days. And speaking of Vegas, you know what else is in Vegas?
The FinTwit conference.
The FinTwit conference that Benzinga will be at. We are co-sponsoring with Lupton Capital. It is May 13th and 14th at the Aria Hotel and Casino in Vegas. Here is the link and the promo code. There's the link. It's benzinga.com/events/Fintuit 2022. Use the code BZYouTube20 to get 20% off. By the way, did you see that somebody is like trying to, like we did like an NFT drop where we gave away tickets? Did you know that?
Yes,
Someone's trying to resell that shit. Did you see that?
I did see that.
Someone's trying to resell a free ticket we gave away. What an enterprising individual.
I mean, NFTs, they all got a price, right?
NFTs, baby. Oh no, Les Ram. The event you're referring to is the April event. That's the Benzinga Cannabis Capital Conference. That's the 18th. The 18th and 19th and 20th down in Miami Beach at the Fountain Blue Hotel. Mike Tyson will be there. Several Congress people will be there. Executives from here. Let's just, rather than go from memory, let's just bring up on the screen right now who's going to be there, because top of my head, I don't remember. So let's bring it up right now. Share my screen. Yada, yada, yada. Mike Tyson will be there. That's a fact. Here we go. All right. Let's go through the agenda quickly. These are just the speakers. Oh, look, Canopy Growth. The CEO of Canopy Growth will be there. The CEO of the Canadian Securities Exchange. Flora Growth, Village Farms. Erwin Simon from Tilray. Mike Tyson. Curaleaf, I'm long that stock. What else do we have? Air Wellness will be there.
Aaron Thomas in the chat saying he'll be there.
I don't know who that is. The parent company, that's Jay-Z's cannabis brand, will be there.
Oh, hell yeah.
Tim Seymour from CNBC, Whitney Tilson.
Beyonce is going to be there.
Al Harrington, NBA legend Al Harrington will be there.
He gets buckets.
Guys, this is I'm not even joking. This is our best speaker lineup we've ever had. I kid you not. I'm not going to be there, and I'm pretty bummed. I'm not going to lie. This is going to be this looks like a lot of fun. You know what, actually? When is this? It's a Tuesday, Wednesday, Thursday thing? Is that right? Yeah, it's Tuesday, Wednesday, Thursday. All right, I'm going to start doing some politicking. See if I can get down there.
You try to go?
I mean, it looks like a lot of fun, man.
I know. I've never
been. You're going to be there.
I've never been to one of our events. I'm supposed to go to this one.
Oh my gosh.
I've been supposed to go to an event before in the past that didn't end up happening, so I'm not going to really hey, producer AB, personal question. Are you still holding NVDA? Yeah, baby. Yeah, Juan. I'm still holding my NVDA all day, every day. If you weren't watching when David Green was on a couple hours ago, but David Green and I were talking about stocks in our category, in our tier of just stocks to essentially buy on any pullback, right?
Yeah.
Any pullback is a buying opportunity. I see Apple, I see Nvidia in that tier.
Yeah.
And that's about it. I mentioned Google kind of in the same breath. Like if Google dropped like 10%, I'd definitely buy some just because Google's not going anywhere. But to me, Nvidia and Apple are just they're my babies.
There is no
I'm going to retire on those two companies.
There is no company that I would feel confident in saying buy it every dip and then forget it forever and never reassess, because things change.
Well, right. I mean, barring like if Apple was dipping and it was dipping because it turns out Tim Cook is doing all these things, whatever, then like that changes the thing. I'm saying all things, if all things that I know right now hold true and the stock dips, then I see Apple and Nvidia always. Microsoft.
Wait, hold on. Yes. Wait, I want to address what Juan just said. He's holding it for dear life. So what does that mean, Juan? Does that mean that you are down and you're sweating bullets right now? Because if you're sweating bullets right now and you're down, then you're in too big. You're too much. Your size is too big, right? Own fewer shares. That's the solution.
Well, and also like there are different ways to trade, invest. Like when I talk about that, like I have Nvidia sitting in my Roth IRA, and it's not like it's not money that I need right now. That's why it's in my Roth IRA. It's for down the road. So it's money that I know I don't need to touch or even look at for the next 10, 20, 30 years. So it's just a long-term, like Nvidia is my biggest position in that portfolio. And if Nvidia, for whatever reason, was down 10% on Monday, like it was up 8% on Friday, I wouldn't be freaking out about it because I'm in it for the long run. I'm not in it for a trade or that I'll need it. Okay, so he's in the green, but I'm holding debit spreads.
Oh, it didn't even occur to me that he'd be in options here. Well, that's a different thing. That's a totally different situation, right? Options are by definition, I guess if you're holding leaps, but options are short term. We are not talking about the short term at all. We're talking about the exact opposite of the short term.
I mean, Juan, I would just say, like, if it's at this point, if Nvidia gets up to above 300 by May, is to me dependent on like the overall market, what the market's doing over the next couple months. If tech is continuing to be choppy, up down, then maybe Nvidia doesn't get up to 300. If big tech's ripping, you a lot of times you see the semiconductors lead. You'll see Nvidia, AMD lead.
Also, you had a really good day yesterday, Juan.
Yeah,
you had a really good.
That would have been a day to sell.
You had a really good day yesterday. They're not all going to be like that though.
I mean, if market conditions are good, I would have no reason. I would see no reason why Nvidia wouldn't like move higher between now and May. And then it's just a question of like how quickly does it move, what price does it get to, et cetera, et cetera.
The odds of the market going back to new highs and Nvidia not doing the same is not good.
Right. Nvidia is such a huge weighting now in the indexes, in the Nasdaq, in the S&P 5. That's what's so crazy is like I was watching SPY the other day. I was flipping back and forth between watching SPY's chart and Tesla's chart, and like every time Tesla dipped, SPY would dip. And I was like, why would I trade SPY when I could just trade Tesla? Like they're doing the same thing.
Yep. All right, let's bring on Sharon.
Sharon
has an HR update for us. I don't know if she does.
Wow.
What's up, Sharon?
It's pretty cool that I'm
we made it. We made a special intro just for you.
Sharon, I have some feedback for you, but it's not from me. It's from somebody else, but it just came to me. So yesterday you sent out an all company email, right?
Yeah.
And you had mentioned that you were going to do this.
Yeah.
On Tuesday, and then you sent the email out. It was for harassment training, right?
Yeah.
And the subject of the email was harassment training, and you had said that you were going to do this, but you announced this in an all company meeting, but not everybody was at the all company meeting. So the people that weren't. It was also in the notes. That's true. All I'm saying is if you weren't in that meeting and you didn't read the notes and you got that email, you probably had a heart attack.
I didn't know what to put in the subject, but I was like, I'm just going to get straight to the point. Like I was debating the subject of the email.
Yeah, no, it was straight to the point for sure. I was there. I didn't say the feedback came from me, but all I'm saying is not everyone was at that meeting, and some people don't read the notes, and they were scared. But you know what? That's their problem, not yours.
Yeah, people gotta pay attention, man.
Yeah. Say, Pat. Hey, yo, Patrick said that Sharon is my favorite guest. It's like a normal conversation.
Sharon, how's the Robinhood portfolio looking?
We need to talk about it.
Is it not looking good?
It just sees so much red. I literally go and I'm like, because like my thought is like, don't look at it every day.
Can we see it? Can you share it for us?
But I was like, geez. I think I made money, but I just forgot how much I put in here, so they could.
We'll see. Well, you can check right now.
Wait, no. The point of this segment was to build long-term habits.
Yeah.
Yeah, no, I know.
No, the meeting was not because of me.
Because like I just thought I'd make money real fast.
I know it's
Everybody thinks that, Sharon. It doesn't make.
Right.
It's not.
But why can't I be the one that like is like, oh, Sharon's first time, here she comes.
That would be fun. Wait, no, that one time you were on.
But there was not a green a second ago. It was all red.
Wait, hold on. All right, I'm pulling it up. We're gonna look at this. All right.
Okay.
Oh, it's green.
So-
It's red again.
Oh yeah, it's red. Go over on the screen, Sharon, and click that all button. We'll see what it looks like. You might be. I think maybe your total contribution's $150. So maybe you're down.
Click all.
$1.92.
Oh, here.
Go to the right. Yeah, right there.
Oh, look at that. You're up
So
5.
angry.
Yeah, you're up more than 5%.
Well.
And what was the lesson we just learned? Don't look at one day. Look at the whole thing.
So all right. So here's what we can do, Sharon. So those stocks that are in the top right, we can go through and click on them individually to see what the returns have been. So yeah, go ahead and click that. Click on view,
Who's good? It looks like.
Yeah, this was my idea.
and then scroll down. So right there, total return so far has been plus $2.44.
Dude, how can you read that? It's so small.
4%.
You have better eyes than me. I'm
You're
wearing glasses. He has better eyes without glasses than I do with glasses. I can't even see what.
So yeah,
the screen says.
this is just saying what's in like the view, and this was like the main position, right? I forget what it is. Every month you're gonna put in $20 into the S&P 500, and then the VTI is very simple.
$400 in this?
No, that's how much the actual stock is. You have $150 in your portfolio total. You see right below 62.45. That's your market value. That's how much you have. That number on the right down there below is the average cost of that stock. Well, this is a fund. Yep, green. Your average cost of this fund.
Don't get into the average cost. We don't need to get into that.
Either way, all right, go back to the homepage. So VU up. We're up 4% in that.
VTI.
All right.
VTI up pretty similarly.
And Sharon, and you can see where it says 1D below there, or the 1 day. You can let's move to like a 1 year, because we know you've owned it for less than a year. So.
Well, now it's been 2 months, I think now.
Yeah. So you're looking at the 1 month chart right here.
So can you go to like the 1 year just to see, like, that way we can see your entire history? There we go. This is your whole history.
No, but she hasn't been in this for a year.
I know, but this is the whole time she's owned it.
No, it's not. This is the whole year.
Oh wait, this won't show. Oh, this won't show. Okay, never mind. Sorry.
We really should be looking at the 1 month.
Sorry. Okay, I stand corrected.
Yeah. So all right, so you're green on the VTI and VU positions, which those are the ones we have the recurring investments
those
for.
Are the ones you guys helped me with. So.
Yeah, and let's check in on the one that you picked. All right, so we're down. We're down.
Oh my goodness.
Sharon's learning a lesson that picking stocks is hard.
It is hard.
I'm not moving.
You're not moving. All right.
She's not selling. It's like Wolf of Wall Street. I'm not selling. That's Sharon.
I'm not leaving. Is the yeah.
Whatever.
So
Whatever.
But Sharon, I mean, you didn't know a war was going to break out when you picked on.
Yeah, no, I didn't. Okay, but I'm staying here. Okay, so that's
okay.
Fine.
Okay, so she's convicted. We admire the conviction.
Free stock.
GM.
Yeah.
Let's check on this.
Oh, yeah, I thought we were gonna sell this.
GM, you're up. Oh, your total. Wait, what? Oh, I'm so confused. It says your total return is plus $5, but 0%. I think it's because you got it for free.
It's because it's free.
I got it for $5.
Yeah, it's
Well,
because
but
it's
it was
free.
free
No,
to
no.
You got $5. Yeah, you got
I got
$5
for free.
worth of this stock
Yeah,
for free.
yeah.
All right, that's good. Kylie in the chat is saying she needs a Sharon ETF.
Wait, Sharon, remind us, what was that stock that you gave us?
It's not doing good. I checked on it every day for a little while.
The very next day.
Inspirato.
Was it the same day?
ISPO.
ISPO.
No, she came on the day after it like spiked up to 92.
650%, and it was
yeah. This is it. This is what Sharon gave us.
Sharon came on the day after this huge spike and had no clue the stock had gone up like 500%. Was like,
I talk about it because I like the company.
Sharon came in right here, right after that. She didn't even know it had gotten up to it. That was wild. That was one of the most fun things ever.
Yeah. So now I need something like that. Like, what's hot? What's going on?
Well, okay. I want to
boy.
talk about this for a
Wait,
second, Sharon, because Kylie was asking for the Sharon ETF. So if we had to build a portfolio of companies just where you spend your money, like where you're customers of, that would be interesting. Like maybe it's like if you go to Starbucks, like we throw that in there, or Target, and then we just pick a fund of like 5 companies where you spend your money. And also
Amazon just takes all my money.
okay, so Amazon.
Sure, I think that's all of us. I think that's
Yeah,
most people.
Amazon, it just makes things so easy because it comes right there. It's never really
Yeah.
delayed. There's a lot of Amazon. But
What about-
also, they
Go
own
ahead.
a shopping company that I like, ShopBop. They own like Amazon owns them, so I like
Oh, ShopBop.
ShopBop. That's
ShopBop.
really why I invested in Amazon, because of ShopBop.
ShopBop. I don't even know about this. All right, cool. Is it like a Fashion Nova type deal? What is it?
Just like an app. Cool clothes.
All right.
What was I about to say? No, Sharon, I don't want to talk. I don't think we should be talking about like the next ISPO. I thought the point of this was to like build long-term sustainable habits, not try to get Sharon rich,
Well, we've got her,
rich quick.
No, we've got her long
Can't we
term.
do both?
Her habit,
Can't we
her
do both?
long term things are the recurring investments into the overall market. You can't really go wrong there. But now, if we're talking about picking individual stocks, so here, what about this, Sharon? Do you live like in an apartment right now, or do you have a house already?
House.
You have a house. Are you staying in that house, or are you gonna look to move maybe eventually?
It's just so expensive right now.
Just so expensive. What about? Do you like restoration hardware?
I do, but it's expensive.
Well, so is the stock, but
The stock is not cheap.
Is it doing well?
no.
What about our house, their competitor? I like our house too.
Okay, so wait, Spencer, can you do me a favor and pull up RH's Restoration Hardware's chart?
And they report earnings on Wednesday, I think.
Yeah, next week Restoration Hardware reports earnings. But what's interesting here, Sharon, as you can see on the chart, can we get a little zoom out?
Yeah, I got you.
Before COVID, this stock was trading at like $200 a share. Then during COVID, because everyone was building houses and buying stuff for their houses, the stock got all the way up in the top right up there where Spencer's cursor is to like $700 a share, and is now all the way back down to $350. So a lot of people are saying, hey, look, this was a $700 stock and now it's down to $350. It's cut in half. It could be time to buy some. So I was just curious if you know anyone that's, building a house right now, or remodeling, and they're buying furniture from Restoration Hardware, maybe that'd be some good insight.
Can
Well-
can you look at our house too?
What's the
I'll find
I don't
it.
know. You gotta figure that out.
our?
I don't even know if I don't think it's
I
publicly
don't know
traded.
if it's public. Yeah, I've
Oh.
never. Our house, as in like
Well,
you are.
I think it's AR. I don't know how bad it's spelling.
Oh, ARH. Okay, it's like a German spelling. ARHAUS. Maybe this does have a stock.
Oh, ARHS, is that it? ARHS.
ARHS. Yep.
That's it. Okay.
This one's a cheap stock.
Well, no, it's low price. That doesn't mean it's cheap.
Well, yeah, good point.
It's
Good point,
it
Spencer.
is very, very not cheap. Actually, it's extremely, extremely expensive for the amount of money that they make.
But it's only a $7 stock. That was my point. Compared to
Yeah,
Restoration Hardware.
so it's affordable, but it ain't cheap.
How's it been doing? How is it doing during COVID? Give me some insight.
We don't know because it only came public after last year, so we don't actually know how it did in COVID. But it is going in the same direction as every other company.
My thought with our
Yeah.
house is that it is comparable to Restoration Hardware. It is not. It's like the look. If you're looking for Restoration Hardware, but it's not as expensive, but it is still expensive. But it's not like as expensive as Restoration Hardware.
It's not like
Okay.
premier luxury, but it's still high quality.
Yeah, but like
Okay.
you can get couches that look very similar. Like you would be like, because like my favorite couch is the Restoration Cloud couch. I do really, really like it. But I don't have it, and
You have a
sometimes I'll
favorite
look at
couch?
The
people's
restoration.
couch.
Have you not seen? There's like a bunch of TikToks and stuff about the Restoration Hardware cloud. It's like a $12,000 couch or something.
It's
Nah,
just
thank-
so
thank God.
beautiful in my opinion.
Don't.
Sharon, can you ask Jason if we can get one for the office? That'd be fun.
Oh yeah, he totally will approve that.
Wait, Sharon, can I get your opinion on the Honest Company? Have
Honest
you ever?
Yeah.
Yeah.
So the only thing that I know about them really is that they're all supposed to be clean products. They did have a little bit of a problem where I think some of the stuff wasn't exactly what they said it was, but then I believe it's kind of come back. I think I would like it.
Well, it's at an all-time low today.
Is this like the Ordinary skincare brand?
Jessica Alba's
It's Jessica Alba's company.
company, and it's supposed to be like all like natural, like better, like the products are supposed to be better for you.
Do you know that Ordinary skincare company?
No.
Is it public?
I'm trying to figure out if like who owns them. Oh, that's
You know what I think will be hot if it does come to the market, but I don't think it is yet. Is Coterie. It is a startup diaper subscription company that is like
diaper subscriptions. Oh my gosh! Enough with the subscriptions. This is the second time in 2 days that we've had a company trying to give. Yesterday was Apple. Now it's diapers. What, you're going to pay a subscription to get diapers delivered to you?
Yeah, but they're like good diapers that are like, you know, like natural, whatever. And they come with wipes, comes to your house, all in. Little under $100 a month.
Is this what you're gonna do, Sharon?
Maybe.
Maybe.
Looking into it.
Love the tepidness.
I have a friend who just started working there, which kind of like interests me. But then I'm seeing it all over social media. A lot of like influencers are using the product, so I just think it's gonna be hot when it does hit the market.
Okay.
I mean,
All right. Well, let's see. Let's see if are there any other trends? Are there any trends out there you see like developing that you think would be interesting to make a move in the stock market?
Like it could be like social like influencer trends, or
maybe like you've gotten a bunch of wedding invites in the last month, and we need to look at like a publicly traded wedding planning company.
Or you have pretty good transparency, visibility, whatever the word is, into what Benzinga is spending money on. Like any types of vendors that work.
There were some interesting vendors that I like brought up to my dad. He's like, "How have you ever heard of those companies?" And I'm like, "Oh, because we use them at Benzinga." Like that was like Datadog. I think is interesting. Can you bring up their stock?
Yeah, now we're talking.
They had news today, or
they did?
No. Maybe, well, the stock's down 5%. I thought they had news.
Oh, it is. Having a good day. Yeah, now we're talking. Datadog. Let's take a look. It's been not bad.
I think that's an interesting one.
Yeah, or maybe sharing some of these companies that we use, like if like for example like Asana or like someone like that starts like trying to upsell us or like hounding us. Maybe it's like, oh shoot, they're like, you know, scrapping to try to get some revenue right now.
Datadog's expensive, but I think it's an engineering tool that we use. So I just think it's an interesting one.
We use Bill.com. That's a stock.
Yeah, I like HubSpot. I don't know if I'd invest in it.
HubSpot's been having problems.
Wait, Sharon, didn't we get rid of almost all of our Ring Central accounts except for mine?
There's a couple.
Except for we got rid of all of our Ring Central lines. Except I have one on my desk, and I'm like one of the only people.
Wait, this is so silly. Ring Central like legit like wasn't working yesterday, and now it's down 5% today. That would have been like an easy short, you would think.
In hindsight, I should have shorted this thing when Benzinga said that they were canceling all that. When Sharon went message everyone, she's like, "Do you use your desk phone? No. Do you use your desk phone? No."
Who
okay.
uses a desk phone? It's unnecessary.
Spencer's literally the only one.
Spencer uses his desk phone.
All right, so Sharon, next time we cancel, like say like, oh, no one's using Asana, we're gonna cancel Asana. Let us know so we can know that maybe that's like not just us. Maybe other companies are doing that as well.
Okay, wait. What about Airtable? Does that trade?
Airtable?
No, it doesn't. But I've heard rumors about this.
I don't even know what
love Slack, right?
What does Airtable do?
I think Airtable is like Asana on steroids.
Yep.
But we don't. We're trying to use it.
CRM is Salesforce, and Salesforce we use Salesforce, and Salesforce also owns Slack, which we use.
What about Snowflake?
Snowflake?
Yeah, Snowflake has been a bit of a dog, but
what about Twilio? Do we use Twilio?
Oh yeah, we use Twilio. We use Twilio.
I like Twilio. Out of all the software as a service plays, Twilio's probably my favorite.
We use Amazon. We use AWS.
Slack? Actually, I sometimes hate Slack. Sometimes.
Slack is CRM. That's a very strong. It's Salesforce. Very strong stock.
Yeah.
Well, not recently, but
that's pretty much it.
Slack is like people are like, "Hello, are you there?" And I'm like, "You gotta give me a second." I'm like,
yeah, it's weird that Slack's tech, like you would expect it to be like 100%, like never glitchy. For how many companies around the world use Slack and how much like Salesforce is worth. It works, but it's like there's always some things that are like going on with Slack that I'm surprised.
Sharon, do you want to investigate oh no, we're using Airtable to like replace everything, right? Isn't that the idea?
I think so. Yeah.
Wait, we are?
In hot. Soon.
Yeah, the Airtable, yes.
I've never consulted on any of these.
Airtable's coming in hot is what Sharon said, and I'm with her on that.
Sharon,
one.
I've never consulted on any of these decisions.
I barely am.
She's the one that gets left with like after it's been decided.
Like,
she's the one that's got to go do
I
it.
have to like go back and be like, I hate your prices. I wasn't involved in the beginning conversation.
She's the one that has to negotiate. All right, Sharon from HR. Thanks. I know you have to go, so thanks for coming on. And
snaps. Hope y'all have a happy Friday.
wait, Sharon. Before we go, are you going to either of our conferences in April or May?
I am not, but I normally am, and it's the best.
Okay, that's all I need to know.
Wait, I'm doing
Blue for sure, and then the May one is that Vegas.
Yes.
That's
Miami
in
Found Blue is gonna be hot. Oh, is this hot? Miami's
Aria?
hot. Okay, Miami. Okay, wait.
What, like temperature-wise?
Can you invest in? Oh, are they a publicly traded company? Who is a company that owns Major Food Group? They are hot right now.
Major. What's it called? Major Food Group.
Yeah, they trade. Do they trade?
Major Food Group. That's a company.
It's a New
Yeah, they own
York
like
based
Carbone, House Alone. They own.
No, I don't think it's public. It is not public.
Okay, I'm on the website right now. Yeah, Carbone,
That is hot in
Santina,
Miami. I think they're hot.
Dirty French, the Lobster Club, the Grill. All right, they've got a bunch of restaurants. But Sharon, so I was just doing what this Ordinary Skincare brand is. It's a brand called Ordinary Skincare, and it's all. It's like they're very upfront with like what's in the bottle. You know, there's no extra like marketing or labeling on anything. And I guess they sell it at Sephora, but I guess Estee Lauder bought the company that makes the Ordinary Skincare product.
I'm really into like natural products and trying to like eat healthier, use healthier products. I think that is interesting. For sure.
I think that's what this is, but more so than trying to be like natural, like that Honest company, they're just like very open with like, this is hydrochloric acid. This is what's in the bottle. This is all it is. Like we're not gonna like, market it as proactive. Like right. It's like basically buying the generic version of like ibuprofen instead of buying Advil.
Yeah.
So I don't know. I'm gonna check this out. I've been hearing more about it. All right. Well, Sharon,
all right.
Always a pleasure to get you on.
Bye, Sharon.
Bye, guys. See you soon.
Peace.
All right. That was a lot of fun. I always love having Sharon on. We have 5 minutes left in the show today, and then we got
spy. I spy a little green candle on the spy.
I don't have the spy. Well, where's my spy? Here's my spy.
It's the S&P 500 index.
Do we go green?
Yeah, we're green.
Yeah, we're green. We're green on the day. That's exciting. What about everything else though? If SPY's green, then Q should have been green, right? No.
See, that's where you went wrong.
Q's lagging. Let's go back to my watch list. Let's look at what's what here. Let's go to all right. What's lagging? Tech growth. Growth is lagging. Okay, not a great day for Kathy. Very good day for energy. Very good day for defensive sectors, right? You got the Utes, you got the banks, you got staples, energy. Good day for defense. Bad day for cyclical because growth tech is not having a good day. ARKK.
My YOLO spy calls I got into are up 22% right now. Let's go. 24% now. Keep pushing. Push. Are you gonna watch F1 over the weekend?
Yeah. I'm gonna finish Formula One, Drive to Survive. Started watching finally the Hulu show about Theranos. Started watching that last night.
Elizabeth Holmes.
Yeah.
Someone in the
good.
chat was asking earlier about dividend stocks. I will say this, Spencer. I've been looking at 3M. And the company has a lot of problems, and the stock price definitely reflects that. One of the biggest problems 3M has going on right now is an ongoing earplug lawsuit. I guess some earplugs that 3M allegedly sold had caused some problems in some people's ear holes, and now people are suing 3M.
Interesting.
So the stock has not been doing well. Currently $150 a share. A couple years ago, this was like a $300 stock almost. So it's almost been cut in half from its highs a couple years ago. But very healthy dividend. It's a company that I don't think is going anywhere. I don't really love it. I think it's like cheap enough to where it would make sense to hold some for the dividend, and also in case the stock comes up a little bit.
Maybe one day I'll do like a whole segment about all the resources that I have found on the internet for ideas for investing. I'm going to drop a link right now in the chat. This is just a totally free plug. I have no relationship to this company at all, but suredividend.com does pretty good dividend coverage. They keep a list of the aristocrats, which is the companies that have raised their dividend for 25 years in a row or more. And I just dropped the link in there. I'll put it up on the screen. There it is. It's just suredividend.com. Pretty good resource if you're looking for dividend ideas. Check it out.
Yep.
All right. I think we're done. Moon or bust, that's happening next. That's what happens on Fridays at 2:00. So smash the like, subscribe, join, become a Benzinga YouTube member. Check out Benzinga Pro for free for 2 weeks. Go to pro.benzinga.com or get a discount by using the code. Use the special link. Use the special link that's on the screen and also in the description. Get a discount on Benzinga Pro, 25% off. We're done. We're on a 71 and a half hour break, right?
Yep.
71 and a half hour break. No,
We've
that's
got
not
more
true.
basketball in the meantime.
We're on actually it's more like a 68 and a half hour break. But we'll be back Monday for this very show. And we're done. Thank you for watching. And I'll see you guys in an hour and a half for at the close. Moon or bust right now.